So friends, very good morning. Today we are in the same chapter PGP. Now we are moving on to some miscellaneous provisions. Those are belonging to the third category of sections. At the beginning of the chapter, I told you that sections can be divided into three categories. Number one, sections relating to income. Number two, sections relating to expenses. And number three, other sections. So now we actually move on to third category of sections called as other sections. In that other sections, first section which we are going to discuss is section 44AA. And this section 44AA talks about the maintenance of books of accounts. It talks about what? Maintenance of books of accounts. So question arises, is it mandatory for every person to maintain the books of accounts? That is what we need to discuss here in this section. I have summarized the provision for you here in the form of a flow chart on page number 150. So in the textbook, you can move on to page number 150. Section 44AA maintenance of books of accounts. See, you know that it is mandatory for every company to maintain the books of accounts, and that too as per the mercantile system of accounting, that is as per the Companies Act. As per the Companies Act. What about others other than company like individual, HUF, firm, etc.? Is it mandatory for them to maintain the books of accounts as per any of the law? Answer is no. There is no law which says that business organization should maintain the books of accounts. But yes, every company should definitely maintain the books of accounts, and they should maintain the books of accounts based on mercantile system of accounting. So here we have section 44AA, which says that we are making a provision for maintaining the books of accounts. They have inserted certain conditions here. If you fulfill that condition, then it is mandatory for you to maintain the books of accounts. It is mandatory for you to maintain the books of accounts. For the purpose of understanding this provision of section 44AA, we are dividing the SSC into two categories. First time in this chapter, we are dividing SSC based on whether he is doing business. Okay, so section 44AA, maintenance of books of accounts. For this purpose, we are dividing the SSC into two categories. Those who are into profession and those who are into business. So SSC carrying on profession and SSC carrying on business, they are bifurcated here. In that profession also, they are further bifurcated into two parts. SSC carrying on notified profession and SSC carrying on non-notified profession. See, first of all, let us try to get into that. What do you mean by notified profession? What do you mean by notified profession? Notified profession means a profession which is notified by the CBDT. So, which are all professions which are notified by CBDT? That list is given on page number 148. So, number one, profession of law, that is lawyer. Profession of medicine, that is doctor. Profession of engineering, accountancy, chartered accountant. Architecture, technical consultancy, interior decoration, authorized representative, film artist, company secretary, or any other notified profession like information technology. These professions are notified. Any other profession which does not fall into this list will be called as a non-notified profession. That profession will be called as a non-notified profession. So if you look carefully, the profession of a teacher is not appearing there. So teaching is a non-notified profession. It is not notified by the CBDT. So for the purpose of understanding the provisions relating to maintenance of books of accounts, we have divided the SSC carrying on profession into two categories. SSC carrying on notified profession and SSC carrying on non-notified profession. Business also, we have divided the SSC into some two categories. But as of now, you may not understand this because we have not completed section 44AD subsection 4. We have not completed 44ADA. We have not completed 44AE. So forget about that. Broadly, we can say that SSC can be divided into four categories. But out of four categories, provisions are same for SSC pertaining to category 2, 3 and 4. So it does not make any difference. Broadly, we can say that it is only two categories. Number one, SSC carrying on notified profession, and number two, others. What is the provision for SSC carrying on notified profession? For SSC carrying on notified profession, you have to check his gross receipts. You have to check what? You have to check his gross receipts. If SSC is into profession since last lot many years, in that case, you have to check his gross receipts for the last 3 years. You have to check his gross receipts for the last 3 years. Right now, what is your previous year? Your previous year is 2021. Corresponding assessment year is 21-22. Your previous year is 2021 and corresponding assessment year is 21-22. So you go backward 3 years, you find out 3 years. Which are those 3 years? Previous year 19-20, previous year 18-19 and previous year 17-18. If the gross receipt is more than 1,50,000 in all 3 years immediately preceding the previous year. So in these 3 years, if your gross receipt is exceeding 1,50,000 in all the 3 years, not only in 1 year, we are talking about all the years. If the gross receipt is exceeding 1,50,000 all the 3 years, then we say that condition is fulfilled. There is only one condition and that is fulfilled. If condition is fulfilled, you get the answer as yes. Or another possibility is you are new into this profession. Say for example, you completed your chartered accountancy in the previous year 2021 and you started practice in the previous year 2021. So this is the first year of you being into this profession. In that case, we cannot check last 3 years because you were not into this profession. You are new to this profession. In that case, we'll see what is the expected gross receipts in the current year. If your gross receipt is expected to be more than 1,50,000 in the current year, then we say that condition is fulfilled. You have got the answer is yes. In that case, what is the answer? You have to maintain the specified books of accounts. You have to maintain the specified books of accounts. What do you mean by specified books of accounts? List of accounts and records which you are required to maintain. Those list is given. That list is given. So let us move on to understand what all things are included in the specified books of accounts. We are on page number 149. Page number 149. We are referring to what? Specified books of accounts. Specified books of accounts include number 1 cash book, number 2 ledger, number 3 journal if SSC is following mercantile system accounting, number 4 bills and vouchers in respect of expenses incurred. Yes, current year means 2021. Yes, current year means 2021. Current year is a normal language I am using. Actually, we should always use the word previous year, assessment year, etc. So, if you are into notified profession and that condition is fulfilled, then you have to maintain the specified books of accounts. Specified books of accounts would include cash book, ledger, journal, bills and vouchers in respect of expenses incurred. Whatever expenditure you have incurred, you have to take the bill from the other person and you have to maintain in your records. Copies of bills issued for amount exceeding 25,000. These are the bills issued. You might have issued bills to your client. If the value of transaction is more than 25, issue the bill and maintain the records. Besides, if you are a medical practitioner, medical practitioner means you are a doctor. Then besides 5 points which are given above, point number A to point number E, you have to maintain 2 extra books. What is that? Number 1, daily case register. Please understand, this is not cash register, it is case register. Means every day doctor might be handling a lot of patients. Manoj, it is not 25,000 rupees, it is 25 rupees only. So whenever you render any services to anyone, definitely you are going to issue the bill, na? You are going to issue the bill to your customer, na? So how can I say that only if the transaction value is more than 50,000, I will give the bill? So here they have said that if the value of transaction is more than 25 rupees, you have to issue the bill and you have to maintain the carbon copy with you. You know now, whenever you issue the bill, you have the carbon copy. So we are saying that you have to maintain the carbon copy with you. If the value of transaction is more than 25, you issue the bill and you maintain the carbon copy. Is that very clear? Mr. Deva, teachers engaged in teaching profession, they are not called by the notified profession, they are called by non-notified profession. Right now we are talking only about the notified profession. About the non-notified profession we will talk about later. First of all, let us complete this. So if you are into a notified profession, then what? Then you have to maintain 5 books of accounts. These 5 things you have to maintain. Plus, if you are a doctor, you have to maintain 2 things extra. If you are a doctor, then you have to maintain 2 things extra. What are those two records? Number 1, daily case register. It is not cash register, it is case register. Case register means doctor has to maintain the records with respect to patient he has treated, what is the name of patient, what illness he was suffering from, what medicines he has prescribed, all those things he has to write in detail. Number B, he has to maintain inventory register. Do you understand the inventory register? Opening balance, add inflow, less medicines distributed to the patient, and then you have a closing balance. So that inflow as well as outflow of medicines should be recorded in the inventory register. Someone is asking me question, sir, shall we satisfy one of the condition? There is only one condition. There is only one condition. There are not 2 conditions. If you are already existing into the profession since last lot many years, then we look at the past. If you are new to the profession, then we look at the current year only. So there are not 2 conditions, there is only one condition. If you are into profession for more than 3 years, then you look at the past 3 years. If you are new to the profession, then you decide based on the gross receipt of the current year. Ramya, have you understood? Yes, okay. Let us proceed further. People who are into non-notified profession or people who are engaged in business, for them the provisions are same. They are not different, the provisions are same. If you are into notified profession, if the condition is fulfilled, you have to maintain specified books of accounts. If you are into notified profession, if the condition is fulfilled, you have to maintain specified books of accounts. And if the condition is not fulfilled, then you maintain such books of accounts which may enable the assessing officer to compute the total income. You maintain such books of accounts which will enable the assessing officer to compute the total income. Here you can write, you can maintain cash book plus ledger. If you maintain 2 books, cash book and ledger, then the income tax officer can easily find out your income. Income tax officer can easily find out your income. No, books of account cannot be maintained for both the methods. That you have to decide whether you want to go for mercantile system or whether you want to go for cash system accounting. That you have to decide. We are just saying that you maintain the books of account. Which method, that you have to decide. Read me, it is not aggregate of 3 years. You have to look at the gross receipt of each year. Every year your gross receipt should be more than 1,50,000 in the last 3 years. In the last 3 years, every year your gross receipt should be more than 1,50,000. If you are new into profession, then the gross receipt should exceed 1,50,000 in the current year. Is that very clear? Yes, let us proceed. Now we say that if condition is fulfilled, then SSC has to maintain the specified books of accounts. If condition is not fulfilled, then he has to maintain such books which may enable the officer to compute the total income. Which are such books? Cash book and ledger. Only 2 books, cash book and ledger. Now let's move on to the right hand side. SSC falling into 2nd, 3rd and 4th category. SSC falling into 2nd, 3rd and 4th category. In other words, those SSCs who are into business or who are into non-notified profession, for them there are 2 conditions. For them there are how many conditions? 2 conditions. Number 1 is condition 1 and then we have condition 2. There are 2 conditions, but you have to fulfill any one of the conditions. There are 2 conditions, but you have to fulfill any one of the condition. What is the first condition? If you are into business or if you are into non-notified profession for more than 3 years, if you are into business or you are into a non-notified profession for more than 3 years, then you have to check the gross receipt of last 3 years. If the gross receipt is more than 10 lakh rupees in any of 3 years, see what is the difference? On the left hand side we said that your gross receipt is more than 1 lakh 15 all the 3 years. When we say your gross receipt should be more than 1 lakh 15 all the 3 years means individually every year now. In all the 3 years your gross receipt should be more than 1 lakh 50. Here we are saying that your gross receipt should be more than 10 lakh in any of 3 years. Any of 3 years immediately preceding the previous year. So we are talking about those past 3 years only. But even if a gross receipt is more than 1 lakh 50 in any one of the year, 1 out of 3 years or 2 out of 3 years or all the 3 years, then also we'll say that condition is fulfilled. So on the left hand side for people engaged in notified profession, your gross receipt should exceed 1 lakh 15 all the 3 years. Whereas in this case, your gross receipt should exceed 10 lakh rupees in any of 3 years. Any of 3 years means it can exceed in one of the year, it can exceed in 2 out of 3 years, or it can exceed in all the 3 years. Even if it exceeds in 1 out of 3 years, then we say that condition is fulfilled. Second part is, if you are new to the business, you have started the business in the current year or you have started your profession in the current year. In that case, we don't have the past 3 years. In that case, you look at the gross receipts of the current year itself. If your gross receipt is expected to be more than 10 lakhs in the current year, if the gross receipt is expected to be more than 10 lakhs in the current year, then we say that condition is fulfilled. Then we say that condition is fulfilled. If condition is fulfilled, you get the answer is yes. And if you get the answer is yes, then you have to maintain such books which may enable the officer to calculate the total income. You have to maintain such books which may enable the assessing officer to compute the total income. Which are those books? Cash book and ledger. Cash book and ledger. What if this condition number 1 is not fulfilled? The first condition is not total income. Manoj darling, first condition is not total income. First condition is gross receipts. What do you mean by gross receipts? Gross receipts means business receipts. Whatever is appearing in the profit and loss account credit side, besides the sales, you also may have some other business receipts now. That is called as gross receipts. Gross receipt means your business receipts. Whatever is appearing on the credit side of profit and loss account, that you want to take the total. Yes, only the PGBP one. Yes, only the PGBP one. Not the total income. Not the income under other heads. Only the PGBP one. Yes. Whatever is appearing on the credit side of profit and loss account, business receipts, you take the business receipts. Now, if first condition is not fulfilled, then what? If first condition is not fulfilled, then second condition will be applicable. In second condition, we are looking at the PGBP income. In first condition, we were checking the gross receipts. In second condition, we are checking the PGBP income. Income from business profession. If income from business profession is more than 1 lakh 20, if income from business profession is more than 1 lakh 20 in any of 3 years, in any of last 3 years, in any of last 3 years means 1 out of 3 years or 2 out of 3 years or 3 out of 3 years. If the PGBP income is more than 1 lakh 20 in any of last 3 years, then we can say that condition 2 is fulfilled. Or if you are new into business, you don't have past 3 years, then you check the PGBP income of the current year. If your PGBP income of the current year is more than 1 lakh 20, then we say that condition 2 is fulfilled. You have to fulfill how many conditions? 1 out of 2 conditions. If you fulfill the first condition, maintain cash book and ledger. If you don't fulfill the first condition, check the second condition. If second condition is fulfilled, maintain cash book and ledger. What if you neither fulfill the first condition nor the second condition? In that case, you will get the answer as no. In that case, you need not maintain the books of accounts in the current year. In the current year, you need not maintain the books of accounts. What about the next year, coming year? In next year, once again, we will check the conditions. These conditions are required to be checked every year. Yes, is that very, very clear? Yes. See both the conditions, na? What is the difference? First condition is gross receipts. Gross receipts means only those things which are appearing on the credit side of profit and loss account. Gross receipt means before deducting expenses. Gross receipt means gross sales. Gross sales plus other business receipts. So we are just taking the total of the credit side. Gross sales plus other business receipts. PGBP income means after deducting all expenses. Final amount of PGBP. So it is different now. In your profit and loss account, sales and net profit are different. Yes or no? So in first condition, we are looking at the sales kind of amount. In second condition, we are looking at a net profit kind of amount. So definitely it is different. So first condition, we are checking the gross receipt. Gross receipt means sale of goods plus other business receipts. And what do you mean by PGBP income? PGBP income means income taxable under the head of PGBP. Yes, have you clearly understood? Dikshit, profit and loss account credit side only revenue receipt will appear. Profit and loss account credit side only revenue receipt will appear. Capital receipt will never appear on the credit side of profit and loss account. Shall I proceed? See, if you have any doubt with respect to any other topic, you ask me, but you ask me separately. When we are having a lecture, in that case, you ask me only those doubts which are connected to this topic only. If I start giving answers for each and every doubt which you are asking me, then our lecture will get into some other direction. This topic will be left here only, and I will be moving on to some other direction. So if you have some other doubt, you can definitely ask. You can ask during the break, or maybe you can send me the WhatsApp message. I will record the voice and send it to you, or if the doubt is very small, I will reply in text form only. I will resolve all your doubts. Don't worry about that. But when we are discussing something, focus on only that topic. See, have you understood this? Yes, section 44AA. Shall I proceed? Okay. Now listen to me very carefully. See, those people who are covered by category 2, category 3 and category 4, we are having two conditions. Condition 1, condition 2. Condition 1, we are checking the gross receipts, means business receipts. Condition 2, we are checking the income from business profession. Here, for gross receipts, we are having an amount of 10 lakh. For business income, we are having an amount of 1 lakh 20. See, if your income is 1 lakh 20, then your tax liability will be definitely 0. But definitely here we are looking at the income from business profession only. We are not talking about the income earned under other heads. But 1 lakh 20 is too less of an amount. It is too less of an amount. So, government in budget 2017, with effect from 1st April 17, for individual and HUF, only for individual and HUF, government has increased this amount. If you are an SSE who is individual or HUF, then instead of 10 lakhs, you have to apply the limit of 25 lakhs. If you are individual or HUF, then instead of 10 lakh, you have to apply the condition of 25 lakhs. And instead of 1 lakh 20, you have to apply 2 lakh 50. Instead of 1 lakh 20, you have to apply 2 lakh 50. This is applicable only in case of SSE who are individual and HUF. Yes? Have you understood this? Well, let's proceed. Let us move on to question number 15. On the same page, we have question number 15. Anand is a person carrying on profession as film artist. Anand is a person carrying on profession as film artist. His gross receipts from profession are as under. What is your previous year right now? 2021. Gross receipts of last 3 years are given. He is into notified profession. So what is the condition? His gross receipts should exceed 1 lakh 15 all the 3 years. Is it exceeding 115 all the 3 years? Financial year 18-19 it is exceeding 150. Financial year 19-20 it is exceeding 150. But financial year 17-18 it is not exceeding 150. So what is the answer? You are getting answer in no. So what? Which books here he is required to maintain? He is required to maintain such books which may enable the assessing officer to compute the total income. Which are those books? Cash book and ledger. Cash book and ledger. Is he required to maintain the books of accounts? Definitely yes. He is required to maintain the books of accounts as per the provisions of section 44 AA. If so, which are those books? So he has to maintain cash book and ledger. Yes, is that very, very clear? Yes or no? Yes. Sarvanna, you having any doubt? Or is clear? So with this we have completed section 44 AA. Now we move on to Rizwan. SSC carrying on business means what? Any SSC. Inside Commerce Studies is carrying on business. All the organizations which are carrying on business. Yes or no? Dikshit, for the purpose of section 44 AA, we have divided the SSC into those two categories. Number one, those who are carrying on notified profession and others. In case of notified profession, we check the gross receipt for the last 3 years. If it is more than 1,50,000 in all the 3 years, or it is expected to be more than 1,50,000 in the current year, in case you are new to the profession, then we say that condition is fulfilled, you maintain the specified books of accounts. If the condition is not fulfilled, you maintain such books of accounts which will enable the officer to compute the total income, that is cash book and ledger. For other category of persons, we have two conditions. One is with respect to gross receipts, the other one is in respect of PGBP income. You have to fulfill any one of the conditions. If the gross receipt is more than 10 lakhs or business income is more than 1,20,000, then you get the answer as yes. In that case, you maintain cash book and ledger. If you get the answer as no, then you need not maintain any books of accounts. So I have summarized this for you. Let's proceed to the next section, that is section 44AB. Section 44AB. Section 44AB talks about audit of books of accounts. It does not talk about maintaining books of accounts. It talks about audit of books of accounts. Sarvanna, forget about 44AD. I have not taught you 44AD. I can take up the doubts related to 44AD only when I complete the discussion of 44AD, not right now. Right now you focus on the section which is being taught to you, that's all. Section 44AB. 44AB talks about audit of books of accounts. Is it mandatory for everyone to get the books of accounts audited? This is what is the question which is answered by this section. And in this section there is an amendment. See, in auditing subject, you might have learned the chapter called as types of audit. You have something called as statutory audit, internal audit. So here it is an audit called as tax audit. Tax audit means a chartered accountant will try to find out whether you have followed the provisions of Income Tax Act or not. For example, have you made any payment in excess of 10,000 by cash, etc.? In that case, that will be disallowed. Have you made any excess payment to your relative? That will be disallowed. Have you deducted the adequate TDS as required by the Income Tax Act? All these provisions of Income Tax Act will be checked. So a chartered accountant will check all the provisions of Income Tax Act, and then there is one form, Form 3CD. This form is required to be filled up and it is required to be submitted. So audit report is required to be given in form number 3CD. Here there is an amendment. Up to last year, this audit report was required to be furnished to the Income Tax Department along with filing the income tax return. This audit report was required to be submitted to the Income Tax Department along with filing the income tax return. This was the provision up to last year. But this year onwards, you have to furnish the copy of audit report 1 month prior to the due date of filing return. You have to furnish the copy of audit report 1 month prior to the due date of filing your income tax return. Whatever is the due date of filing income tax return, it can be either 31st July or 31st October, whatever is the due date. 1 month prior to that, you have to submit this audit report to the income tax department. So up to last year, income tax return and income tax return and the tax audit report were going hand in hand at the same time. Now your tax and audit report is required to be submitted 1 month before your due date of filing the income tax return. Now friends, let's want to understand who all are required to get their books of accounts audited. Who all are required to get their books of accounts audited? So first category of persons are those who are engaged in business. Person carrying on business. In that case, if the total sales, turnover or gross receipts, sales turnover or gross receipts, sales turnover or gross receipts from such business exceeds 1 crore. If you are into business, then if your sales or turnover or gross receipts is more than 1 crore, then it is mandatory for you to get your books of accounts audited and submit the audit report 1 month prior to the due date of filing return. Now see, here the Income Tax Act has used the word sales, turnover, gross receipt, everything at the same time. But they have nowhere explained what is the difference between sales, turnover and gross receipts. So sales, it is very simple to understand. Whatever goods you have sold to customers or whatever services you might have rendered to your customers. Turnover, we believe that turnover is either the purchase or the sale, whichever is higher. In practical life, it is believed that turnover means either the purchase or the sale, whichever is higher. It is not written in the Income Tax Act, but this is what people are having the opinion in the practical life. So turnover means either the sale or the purchase, whichever is higher. Gross receipt means sale plus other business receipts. Sale of goods plus other business receipts. So this kind of detail will not be asked to you in the examination. You have to just remember that if the sales, gross receipt or turnover is more than 1 crore, then it is mandatory for the business organization to get the books of accounts audited and submit the copy of audit report 1 month prior to the due date of filing return. Now we have some important point to be discussed here. Important point number 1. I will not get into this section 44 AD right now. I am just explaining you 44 AD in one line. I am explaining you 44 AD in one line. See, section 44 AD is a section relating to presumptive taxation. This section is made for small business organizations. Government says in case of small business organization, they need not maintain the books of accounts. They need not get their books of accounts audited. Without applying the provisions of Income Tax Act, they can just declare their income. How their income will be calculated? It is nothing but gross receipt multiplied by a certain percentage. So government says every small business organization will find it difficult to maintain the books of accounts. Even if they maintain the books of accounts, then they will have to go to a chartered accountant, they will have to go to a chartered accountant and ask the chartered accountant to maintain the books of accounts. And chartered accountant may charge heavy fees for maintaining the books of accounts. So all these small business organizations, government has provided them relief, saying that you need not maintain the books of accounts. You need not get the books of accounts audited. You can just declare the income on a presumptive basis, certain percentage of your gross receipt. So in those cases, the turnover limit for audit purpose, which is generally 1 crore, in those cases of small business organization, the turnover limit is not 1 crore, it is 2 crores. It is 2 crores. So all those SSE who are covered by section 44 AD, for them, for getting the books of accounts audited, the limit of turnover is not 1 crore, it is 2 crores. Definitely, we'll discuss section 44 AD in detail once we proceed further. But right now, we can remember only two things. If the turnover, gross receipt or sales is exceeding 1 crore, it is mandatory for you to get the books of accounts audited. On the other hand, if you are going on to section 44AD, if you are moving on to section 44AD and you are declaring income as per section 44AD, then the limit of turnover for getting the books of accounts audited is not 1 crore, it is 2 crores. Now let's move on to important point number 2. This is a budget 2020 amendment. What it says, government has increased the audit limit from 1 crore to 5 crore. The limit, the turnover limit which is applicable to ascertain whether the assessee is required to get the books of accounts audited or not, generally it is a limit of 1 crore. But government says in certain situation, if certain condition is fulfilled, then instead of 1 crore, we will apply the limit of 5 crores. Will apply the limit of 5 crores. So they are having, they'll be relaxed because in their case, turnover limit is higher. So even if your turnover is up to 5 crores, you are not required to get the books of accounts audited. When there is condition, what is that condition? What is that condition? There are two conditions. Number one condition is in respect of receipts, and number 2 condition is in respect of payments. Receipts can be of two types. Number 1, cash receipts. Number 2, receipts through bank. Receipts through bank. And then we take the total of both. That is 1 plus 2. Similarly, payments also we can bifurcate in 2 parts. Number 1, cash payments. And number 2, payments through bank. Then you take the total, which is nothing but addition of 1 plus 2. Now government says the first condition is in respect of receipts. Second condition is in respect of payments. What the condition says? Condition says your cash receipts, this amount, cash receipts, should not be more than 5% of total receipts. This is the total receipts 1 plus 2. Your cash receipts should not be more than 5% of total receipts, and your cash payments should not be more than 5% of total payments. In other words, if you are doing business or you are into profession and you are, if you are into business and you are collecting money from your customers through bank, most of the transactions are online, or you are accepting money through bank only, you are not accepting cash. And when you spend money for your business, at that point of time also you are making most of the payments through bank only. So you are doing all white transactions. In such case, government says, we will not apply the limit of 1 crore to you, we will apply the limit of 5 crores. So if the cash receipt or cash payment is up to 5% of the total receipts and total payment, then the audit limit for you, it is increased from 1 crore to 5 crores. What if your cash receipts and cash payments are slightly higher than 5% of the total receipts and total payments? In that case, the limit of 1 crore will be applicable. Yes, is that very, very clear? Audit limit will be 5 crores if the cash receipts and cash payment does not exceed 5% of total receipts and 5% of total payments. Yes, is that very clear? Shall I proceed further? Yes, very good. Superb. So this point number 1 we discussed for those assessees who are engaged in business. Point number 1 we discussed for those assessees who are engaged in business. Point number 2 is for those who are engaged in profession. Irrespective of whether it is a notified profession or non-notified profession, both. This includes those who are engaged in notified profession as well as non-notified profession. So you can write here if you want notified plus non-notified. Notified plus non-notified. One is what condition to 5% of total receipts, 5% of total payments. If your cash receipts are up to 5% of total receipts and if your cash payments are up to 5% of total payments. Total payment means cash payment as well as payment through bank, and total receipts means cash receipts means total receipts means cash receipts plus receipts through bank. If the cash receipts and cash payment does not exceed 5% of total receipts and total payments, then the limit will be 5 crores for you if you are into business. What if you are into profession? In that case, limit is 50 lakh rupees. If the gross receipt from the profession exceeds 50 lakh, then it is mandatory for you to get the books of accounts audited. Right now, I am just explaining you point number 1 and 2. That's all. I have explained you point number 1 and 2. Point number 3, point number 4 and point number 5, we will discuss later on. Once we complete section 44AE, 44AD and 44ADA, once we complete those three sections, we'll come back here. We'll also go on to 44AA, we'll come here. Once again, we'll refer these provisions. Important point to be noted. Number 1, it is sufficient if the books of accounts are audited under any other law. It is sufficient if the books of accounts are already audited under any other law. For example, in case of company, anyway books of accounts are getting audited under the Companies Act. So you need not get the books of accounts audited once again. You just fill up form number 3CD. Form number 3CD is required to be filled up and it is required to be submitted. You need not get the books of accounts audited once again. See, here we applied the limit of 1 crore, na? Here we applied the limit of 1 crore. What is that 1 crore? Total sales turnover or gross receipts. That does not include income under other heads. We are talking only about the PGBP. Income under other heads should not be considered while applying the limit of 100 lakhs. That is 1 crore. You have to just see the sales, turnover, gross receipt from business or profession. That's all. Don't look at the income under other heads. What is the amount of capital gain? What is the amount of other sources of income? All those things you should not see. You should see what is the sales or what is the turnover or what is the gross receipt from the business or profession. That's all. What if you are having more than one businesses? Say for you are into textile business as well as plastic business. Textile business turnover is 60 lakhs. Plastic business is also 60 lakhs. Whether you are required to see the turnover of each business separately, that 1 crore limit is required to be applied for each business separately, or you have to take up the aggregate. So answer is you have to take up the aggregate. You have to see for one SSC. Not for one business. So the limit of 100 lakhs for getting the books of accounts audited, that limit is required to be applied on an aggregate basis. If you are into multiple businesses, then you take up the aggregate of turnover of all the businesses. So point 3 says, in case of multiple businesses, sales, gross receipt, turnover from all such businesses shall be aggregated to apply the limit of 100 lakhs. Yes, is that very, very clear? Say yes or no. Okay. So which section we have completed? Section 44AB we have completed. So today till now we have completed two small sections. Number 1, section 44 AA, which talks about maintaining books of accounts, and section 44AB, which talks about audit of books of accounts. Now we need to get into presumptive taxation scheme. Presumptive taxation. What do you mean by presumptive taxation now? First of all, there are three sections here. In your syllabus, there are three sections in presumptive taxation. Number one is section 44 AD. Then we have section 44 ADA. And then we have section 44 AE. So basically, we need to discuss three sections. See, what do you mean by presumptive taxation is, see, every small business organization, if you ask every small business organization to maintain the books and get the books accounts audited, say for example, very small retail trader, if you ask him to maintain the books accounts, and if you ask him to get the books accounts audited, then he doesn't know how to maintain the books accounts. Either he will be required to appoint a accountant, or he will hire a chartered accountant saying that maintain my books accounts. In that case, chartered accountant may charge heavy fees. Chartered accountant may charge heavy fees. So government says that all the small business organizations who cannot afford to pay the fees of a chartered accountant, who cannot afford to hire an accountant on a full-time basis, these small business organizations, we are giving them a relief. What is that relief? You don't maintain the books of accounts, you don't get your books of accounts audited. Whatever is your sales now, whatever is your turnover, of that turnover, certain percentage will be given to you. Apply that percentage on the turnover. Whatever is the amount arrived now, that you declare it as business income. That's all. So forget about the provisions of Income Tax Act. Forget about what actual transactions you have carried on. You just look at the amount of sales turnover. On that, apply a certain percentage which will be given in the section. Applying that percentage, whatever income is derived, you declare that much amount of income in your income tax return. Then what is the relaxation government is offering you? First relaxation is you are not required to maintain the books of accounts. I'll start with presumptive taxation. See, presumptive taxation in Income Tax Act in the chapter of PGBP in your syllabus, we are having three sections. Section 44 AD, section 44 ADA and section 44 AE. There are three sections here. Section 44 AD, we have three sections here. Number one, section 44 AD. Then we have section 44 ADA. And then we have section 44 AE. So broadly, there are three sections relating to presumptive taxation. What do you mean by presumptive taxation scheme? Presumptive taxation scheme means your income will be presumed. Presumed means assumed. Presumed to be income given in section. So in every section, in each of the section, your income is presumed to be something. This, first of all, this presumptive taxation scheme is made for whom? All those small business organizations. Say for example, I told you that if there is a retailer, there is a small retailer, if you ask him to maintain the books of accounts and get the books of accounts audited, then he'll have to pay very high fees, very heavy fees to chartered accountants. And he will not be in a position to afford the fees of a chartered accountant. Even a small retailer cannot afford to appoint a full-time accountant. Therefore, government said, we will provide you relaxation. You need not maintain the books of accounts. You need not get the books of accounts audited, provided you declare your income to be certain percentage which is given in the section. If you are ready to accept that you have earned the amount of income which is given in the section, then you need not maintain the books of accounts, you need not get your books of accounts audited. That is called as presumptive taxation. So presumptive taxation, basically these provisions are introduced to provide some relaxation to small business organizations and those people who are into profession but they are earning less income. So smaller business organizations and smaller professionals, for them, this presumptive taxation scheme is introduced to provide some relaxation to them. So now what I am doing is, I will be taking up these sections from the handwritten notes. I have simplified these provisions in the handwritten notes. So I will be taking up these sections from the handwritten notes. First section is section 44 AD. Section 44 AD. Computation of profits and gains of eligible business on presumptive basis. Computation of profits and gains of eligible business on presumptive basis. First of all, who can take the advantage of this section of presumptive taxation? Small SSEs who are doing business on a small scale. So, I am dividing the SSE into two categories. Number one, covered by the section, not covered by the section. Not covered by the section means other SSEs. To them, section 44 AD is not applicable. If 44 AD is not applicable, then they have to compute the business income as per the normal provisions of the Income Tax Act. As per the normal provisions of Income Tax Act means, as per section 28 to section 44 AD, as per section 28 to 44 DB, they have to refer and they have to compute the income as per the provisions of Income Tax Act. On the left hand side, we have the list of SSEs who all will be eligible to opt for presumptive taxation scheme, which is given in section 44 AD. The first SSE is a resident individual. In other words, non-resident individual is not allowed to go for section 44 AD. 44 AD is not made for him. Number 2, resident HUF. Number 3, resident firm excluding LLP. So LLP is not covered here. So only 3 persons are covered here. Number 1, resident individual. Number 2, resident HUF. And number 3, resident firm excluding LLP. So these people who have not claimed any deduction under section 10A or 10AA or 10B or 10BA or any income based deduction under chapter 6A, then they can go for presumptive taxation. In presumptive taxation, income tax provisions of the head of PGBP will not be applied to them. Their income will be calculated mathematically just by applying a small formula. And that formula is nothing but gross receipt multiplied by prescribed percentage. Prescribed percentage is given in the section. Say for example, it is 6%. So whatever is your gross receipt, multiply that gross receipt by 6%, and whatever amount is derived, that will be considered as your income from business. That's all. So you need not apply the provision of the Income Tax Act. Your income will be presumed to be 6% of your gross receipts. Therefore, we say it is a presumptive taxation. Your income will be presumed to be something as given in the section. Now, who all are eligible SSE? Who all can take the advantage of this section? Number 1, resident individual. Number 2, resident HUF. And number 3, resident firm excluding LLP. Company cannot take the advantage. Association of person, body of individual, artificial juridical person. These people cannot take the advantage of section 44 AD. Now, see, every business organization cannot take the advantage. Who all cannot take the advantage? Who all cannot take the advantage? From the definition of person, we have extracted 3 persons: resident individual, resident HUF, and resident firm. Now, based on the nature of business also, there are certain businesses wherein you cannot take the advantage of section 44 AD. Which are those businesses? See, first of all, person engaged in notified profession cannot take the advantage of 44 AD. Why he cannot take the advantage of 44 AE? Why he cannot take the advantage of section 44 AD? Because for those people who are into notified profession, for them, government has made a separate section, that is section 44 ADA. So if they want to take the advantage of presumptive taxation scheme, they have to mandatorily go to the section which is made specifically for them. So all those who are into notified profession, will be required to go into section 44ADA. Number two, those people who are earning commission or brokerage income. See, those people who are earning commission or brokerage income, or those people who are into agency business. Agency business means they might be earning commission on sale of goods, etc. So those people who are basically earning commission or brokerage income, out of whatever amount they have earned, major portion is profit only. A person earning income in the nature of commission or brokerage, whatever income he has earned, out of that, whatever amount he has received, out of that major portion will be income only. For example, you have paid a fee of say 40,000 to Inside Commerce Studies. So out of 40,000, what is their profit element? It might be 20, 25, 30%. So their profit element would be only 12,000 rupees out of 40,000. But when it comes to a person earning income in the nature of commission brokerage, whatever he has earned, major portion is income only. Major portion is his profits only. So if you tell them that you go in section 44AD and declare your income to be say 6% of your gross receipt, then they will be more than happy to declare that. So government believes that whatever gross receipts they have earned, major portion of that gross receipt is nothing but an income. So we don't want to give some relaxation to them. Therefore, people earning income in the nature of commission or in the nature of brokerage or all those who are into agency business, for them this section is not applicable. Number four, people who are into transportation business, for them also section 44AD is not applicable. Why it is not applicable? Because for them separate section is made, and that is section 44AE. For them a separate section is made, that is section 44AE. Now all those people who are not covered in these 4 points, all those who are not covered in these 4 points, for them we can use the word or term other businesses. For them we can use the word or term other businesses. For these other businesses means who are not into commission brokerage income, who are not into transport business, who are not into agency business. Other than this, for example, Inside Commerce Studies, they are into business. So they are not earning commission brokerage, they are not into agency business, they are also not into transportation business. So can they go for section 44AD? Yes, if this business is in the name of resident individual, resident HUF or resident firm, excluding LLP. But only small scale businesses can take the advantage of section 44AD. Question is, how do we identify whether SSC is into a business at a smaller scale or a larger scale? That you have to decide based on the turnover. If the turnover of the SSC is less than equal to 2 crores, then we are giving him an option. He can opt to declare income as per section 44AD. But if the turnover of the SSC, turnover of the business of the SSC is more than 2 crores, then we say that he is taking up the business at a large scale. In that case, we will not apply the provision of section 44AD to him. We will not allow him to go for the provision of section 44AD. So he has to maintain the books of accounts, get the books of accounts audited. If these people will not go to a chart accountant, then who will go? People whose turnover is up to 2 crores, we are saying that we will give them relaxation. They need not maintain the books of accounts. They need not get the books of accounts audited. And even if you give relaxation to those who are having a turnover of more than 2 crores, then who will go to a chart accountant? Chartered accountant will become unemployed. So those people who are having a turnover of more than 2 crores, to them section 44AD is not applicable. 44AD is not applicable means they have to declare income as per the normal provisions of the income tax. They have to refer section 28 to section 44DB, calculate the income as per those provisions and declare income as per those provisions. So before we now move on to further part of section 44AD, I am summarizing whatever I have discussed till now in section 44AD. Who can take the advantage of section 44AD? Those resident individual, resident HUF, resident firm excluding LLP, who are into any business other than commission brokerage income business or other than agency business, other than transport business and other than notified profession. They are into other businesses and the turnover is less than or equal to 2 crores, they can take the advantage of section 44 AD. Now it is not mandatory for them to go for section 44 AD, it is optional. First year, let them decide whether they want to go for section 44 AD or they don't want to go for section 44 AD. So there are two options, SSE Ops. SSE Ops. He says that yes, I want to declare income as per section 44 AD. Or SSE opts to declare income as per normal provisions. If SSE himself says that I want to declare income as per normal provisions, I don't want to go for section 44 AD, in that case his income will be computed as per normal provisions of Income Tax Act. Then here we say that SSE is opting for section 44 AB, section 44 AD. Then we are having two options, option A, option B. Next page says SSE opts to declare income as per section 44 AD. He has opted to go for section 44 AD. Then left hand side, first of all let us talk only about the left hand side. In that case, his PGBP income will be gross receipts multiplied by 8%. Whatever is his gross receipts now, that multiplied by 8% will be considered to be his PGBP income. Will be considered to be his PGBP income. But instead of 8%, we will apply 6% in case of that portion of the turnover of gross receipt which is received by account pay check, account pay bank draft, ECS, other electronic mode up to the due date of filing return. Up to the due date of filing return. Let me explain you. Whatever the gross receipts are, say for example, your gross receipts are say 2 crores. So can you go for section 44 AD? Answer is yes. If your gross receipts are either less than or equal to 2 crores, then you can take the advantage of section 44 AD. Now you have decided to declare income as per section 44 AD. You have decided to declare income as per section 44 AD. Then this gross receipts is required to be divided in two parts. Part 1, part 2. The portion of the gross receipts which you have received by account pay check, account pay draft. Gross receipt means what? The amount of goods you might have sold to your customer, na? Plus other business receipts. You take up the total, that is the gross receipt. Out of that, whatever amount you have received by account pay check, account pay bank draft, ECS, NEFT, debit card, credit card, other electronic mode. Any amount, if it is received by account pay check, account pay bank draft, ECS, NEFT, debit card, credit card, etc., then it is further divided into two parts. Number 1, received up to section 139(1) due date. That is the due date of filing return. Whatever amount is received by account pay check, account pay bank draft, etc., up to the due date of filing return, on that portion you apply 6%. If the amount is received by account pay check, account pay bank draft only, but it is received after due date under section 139 subsection 1, then you apply 8%. So basically your gross receipt is required to be bifurcated in different parts. Part 1, that portion of gross receipt which is received by account pay check, account pay bank draft, ECS, NEFT, etc., and the amount is received up to the due date of filing return, you apply 6%. On the balance portion you apply 8%. Second part, if the gross receipt is received in cash form or say crossed check or bearer check in that case you apply 8%. In that case you apply 8%. So on which portion you have to apply 8%, on which portion you have to apply 6%, na? That is what is explained here. What it says, generally it would be gross receipt into 8%, but it can be gross receipt into 6% in case of that portion of turnover or gross receipt which is received by account pay check, account pay bank draft, ECS or other electronic mode up to the due date of filing return. This is the amount of income which you have to declare. Yes, is that very clear? So gross receipts are bifurcated in two parts. Number one, portion of the gross receipts which is received by account pay check, account pay bank draft, ECS, NEFT, debit card, credit card, BHIM, UPI, etc. And gross receipt received by cross check, bearer check and cash. Whatever portion of the gross receipt is collected by cross check, bearer check, cash, on that you apply 8%. Account pay check, etc. further divided in two parts. Amount is received from your customers up to the due date of filing return, apply 6%. It is received after the due date of filing return, you apply 8%. What if the amount is not received from the customer only? It is lying in debtors, you have not received money. Up to the due date of filing return, you have not received money at all, it is lying in debtors. On that also you apply 8%. On that also you apply 8%. Yes, is that very, very clear? Yes or no? Okay, now, so your income will be presumed to be how much? Your income will be generally presumed to be 8% of your gross receipt. But instead of 8%, we will apply 6%. On what? On that amount of gross receipt or that amount of turnover which is received from our customers by way of account pay check, account pay bank draft, ECS or other electronic modes like debit card, credit card, NEFT, RTGS, IMPS, BHIM, UPI, etc. And those amounts are collected within the due date of filing return. On that portion you have to apply 6%, other portion you have to apply 8%. That is the minimum amount of income which you have to declare. If you want to declare something more than 6%, 8%, you are free to declare. But this is the minimum amount of income which you have to declare. If you say that my actual income is less than this income, we are not going to accept unless you are maintaining the books of accounts and getting the books of accounts audited. So once you go for section 44 AD, you have to declare an income of 8% or 6% of gross receipts. Now there are certain points. Section 32, section 38 will not apply to you. I have already told you that government has created a special provision for small people who are into businesses at a very small scale. To them we will not apply any provisions of the Income Tax Act. Mathematically we will ask them to calculate the income. So simply their income will be gross receipt multiplied by 8% or 6%, whichever is applicable to them. To them, Income Tax Act, PGBP chapter, any of the provisions will not be applicable. So we say that section 32, section 38 will not apply. In other words, they cannot claim deduction for any of the expenses. This 8% gross receipt, 8% or 6% of gross receipt is the final amount of PGBP income. Means expenses are already deducted. You will not get separate deduction for the expense. Forget about all the provisions of the income tax, all the provisions of PGBP chapter, they will not apply to you. This 8%, 6% is the final amount of PGBP income which you are supposed to declare. So section 32, section 38 do not apply to you. Sections relating to disallowance, like section 40 capital subsection 2 excess payment to relative, section 40 capital subsection 3 payment exceeding 10,000 made by cross check, cash, etc. that will not apply. 40 clause A, subclause 1, subclause 1A, subclause 3, payments made without deducting TDS, all those provisions will not apply. So there is no allowance, there is no disallowance. These provisions are not made for you. Forget about this. You will not get any deduction from section 30 to 38. In this range of section 30 to 38, you are not going to get any deduction. In this range, you also have section 32. You also have section 32, which talks about depreciation. So will you get deduction for depreciation? Answer is no, don't claim anything. You will not get deduction for depreciation, but still you have to calculate depreciation as per the Income Tax Act, and you are expected to deduct the amount of depreciation from the block of asset. Why na? Because say for example, your this year's opening WDV is 10 lakh rupees and you have decided to declare income as per section 4480. For example, you declared income as per section 4480 for 10 years. For 10 consecutive years, you declared income as per section 4480. Now, year number 11, you decided that you want to declare income as per normal provisions. Year number 11, you decided to declare income as per normal provisions. In that case, you will get deduction for all the expenses. So, in year number 11, definitely you are going to get deduction for depreciation also. Will you calculate depreciation on the value of block of 10 lakhs? No. Government says this value of block of 10 lakh was of year number 1. It was of year number 1. Even though we did not give you depreciation deduction, every year you have to calculate depreciation, you have to deduct from the value of block. So in year number 11, if you decide to declare income as per the normal provision, definitely you will get depreciation deduction, but the depreciation will not be calculated on the amount of 10 lakh rupees. You have to find out the reduced value of the block after deducting depreciation for year number 1 to year number 10. 10 lakh is the value of the block at the beginning of year number 1. From year number 1 to year number 10, you go on deducting the depreciation from the value of block. And whatever is the WDV arrived at the beginning of year number 11, on that you have to calculate depreciation for year number 11. In other words, while you declare income as per section 4480, we are not going to give you any deduction for depreciation, but still you have to calculate the depreciation and you are expected to deduct the amount of depreciation from the value of block. Yes, is that very, very clear? Yes or no? Yes. So point 4 says depreciation is deemed to have been allowed. You have to compute the WDV accordingly. Means you have to calculate the depreciation and you have to deduct the depreciation amount from the WDV. But you are not going to get deduction for the depreciation. Point 5. Whether the set off and brought forward of losses, this provision will be applicable to you or not? Answer is yes, those will be applicable. Because set off and carry forward of losses, they are pertaining to some other chapter. And those sections are starting from section 7070. Here we are saying that section 30 to 38 are not applicable. So section 7070 onwards, they don't fall within the range of 30 to 38. What will not apply to you is PGBP provisions will not apply to you. Section 28 to section 44 DB, this provision will not apply to you. All other heads of provision will apply to you in the normal manner. Point number 6. Point number 6 says, if the SSC is a partnership firm and is paying salary, commission, etc. to the partner, can they claim deduction for this salary, commission, etc. paid to partner? Answer is no. This also is deemed to have been allowed. You will not get any deduction with respect to salary, bonus, commission, etc. paid to the partner because entire PGBP chapter is not applicable to you. So you can't claim deduction for any expense. 8%, 6% is the final amount of PGBP income. Point number 7 is pertaining to the chapter of advance tax. Right now you may or may not understand. Here we are saying that such SSC who are declaring income as per section 4480, they have to pay 100% advance tax by 31st of March. See, generally advance tax is payable in 4 installments. But in this case, we are saying that they can pay 100% advance tax right away by 31st March only in one installment. You may not understand this right now because you don't know what is advance tax. So when we move on to the chapter of advance tax, definitely we will try to connect this point to that provision. What is the relaxation offered in this section? Yes. What is the relaxation offered in this section? If SSE is opting to go for this section, what is the advantage given to him? What is the relaxation given to him? He need not maintain the books of accounts and he need not get his books of accounts audited. These are the two relaxations which are given to the SSE if he is opting to declare income as per section 44 AD. So point number 8 says he need not maintain the books of accounts, and point number 9 says he need not get his books of accounts audited. These are the two relaxations which are given to the SSE who are declaring income as per section 44 AD. Yes, is that very, very clear? Left hand side portion part is clear? Part A? Yes or no? Yes. Now right hand side now. Right hand side I will take an example to make you understand. Right hand side part I will take an example to make you understand. Then I will read what is written. So I am taking the example. I am taking the example. I am taking the example here. Right now, say for example, it is previous year 2021. It is previous year 2021. For example, previous year 2021 is the first year in which you decided to declare income as per section 44 AD. So previous year 2021, you declared income as per section 44 AD. You opted for section 44 AD. You opted for section 44 AD. In that case, we are saying that once you opt for section 44 AD, you have to stay in that section for the next 5 years. Once you enter, see, if the lecture is for say 1 hour, the moment you enter the classroom, you will not be allowed to go outside the classroom. You have to stay inside the classroom for 1 hour. Similarly, once you have opted for section 44 AD, you declare income as per section 44 AD in a particular year, then next 5 years, it is mandatory for you to stay in that section only. You will not be allowed to exit the section. So for next 5 years, you have to declare income as per section 44 AD. Which are those next 5 years? Previous year 21-22, previous year 22-23, previous year 23-24, previous year 24-25, and previous year 25-26. So if you decide to get into the section in the previous year 2021, you declared income as per section 44 AD, then it is mandatory for you to stay into that section only for the next 5 years. So for next 5 years, from previous year 21-22 up to the previous year 25-26, it is mandatory to declare income as per section 44 AD only. In other words, you cannot exit from this section. What if you exit? What is the consequence if you exit? Say for example, you declared income as per section 44 AD in the year 21-22 also. 22-23 also you declared income as per 44 AD. But 23-24, you decided to take the exit from the section. So 23-24, you took the exit from the section. You did not declare income as per section 44 AD. You said that no, I am fed up with this section. There is no point, there is no advantage of getting into this section. I want to take the exit. If you take exit before completing that 5 years time now, then we will not allow you to re-enter into the section for the next 5 years. We will not allow you to re-enter into the section for the next 5 years. Next 5 years means 5 years after 23-24 means 24, 25, 26, 27, 28 and 28, 29. You cannot enter the section for the next 5 years. You will not be allowed to enter into this section. So what it says, I'll summarize for you. The moment you decide to go for section 44 AD, the year in which you get into section 44 AD and you declare income as per section 44 AD, next 5 years you need to stay into that section only. It is mandatory for you to stay into that section for next 5 years. If you take the exit from the section before completing a span of 5 years, then from the year in which you have taken the exit, from that year, after that year, for the next bunch of 5 years, you will not be allowed to re-enter into the section. You will not be allowed to re-enter into the section means you have to declare income as per normal provision during this period of 24, 25 to 28, 29. Means now if you want to enter the section, from which year you can enter the section? You can enter into the section from 29-30 onwards, 2029, 2030 onwards. Is that very, very clear? Have you understood this? Okay. Now someone is asking me a question, sir. Once I have entered the section, what if my turnover in the next year exceeds 2 crores? What if my turnover in the next year exceeds 2 crores? In that case, anyway, you are not eligible to get into section 44 AD. You have entered into section, say for example, in the year 2021. So next 5 years, you have to stay in that section. You can stay into that section provided the section is applicable to you. During the bunch of 5 years, if during any particular year, if your turnover has exceeded 2 crores, then door of this section is closed for you. But yes, that particular year will also be considered as part of that bunch of 5 years. For example, in the year 22-23, your turnover has exceeded 2 crores. Then 22-23, you have to declare income as per normal provisions. But yes, that 22-23 will also be taken to be part of that 5 years bunch. See, if your turnover exceeds 2 crores, you are not exiting from the section. Section itself is throwing you out. Section itself is throwing you out. We are saying that once you have entered the section, you have to stay in that section. Meaning thereby, you are eligible to stay in that section and you should stay into that section. If your turnover exceeds 2 crores, then you are not eligible. Section itself is throwing you out of the section. Yes, have you understood this? In previous year, 23-24, you are exiting the section. Means previous year 23-24, you have declared income as per normal provisions. Then from 24-25 onwards up to 28-29, you have to apply normal provisions. You have to apply normal provisions. 44 AD will not apply to you. Section 44 AD, you cannot use this section. Is that very, very clear? Okay, yes. Now, let me give you one important point. The year in which you exit from the section. In our example, you have exited the section in which year? You have exited the section in the year 23-24. So, the year in which you exit the section, in that year, we would ask you a very simple question. Whether your income is more than the basic exemption limit. In the year in which you exit the section, we will ask you very simple question, whether your income is more than the basic exemption limit, generally which is 2.5 lakhs. If you say yes, my total income is more than the basic exemption limit, then we will catch hold of you and we will throw. We will catch hold of you and we will throw you. The moment we throw you, where you will fall, we will drop you in the office of a chartered accountant only. So what you have to do there? You have to maintain your books of accounts and you have to get your books of accounts audited. So the moment you take the exit from this section in a particular year, we would ask you one question to you, whether your total income is more than the basic exemption limit. And if you said yes, my total income is more than the basic exemption limit, we will pick you up and we will drop you in the office of chartered accountant. And what do you have to do? You have to maintain the books of accounts, get the books of accounts audited, then only we will allow you to exit the section. Yes, is that very clear? So now I move on to this right hand side part. Whatever I explained you is written here on the right hand side part. Let us read this. SSE declares income as per section 44 AD in the current year. Current year means this previous year 2021. SSE declares income as per section 44 AD in the current year, and he do not declare income as per section 44 AD during any of the 5 years following the current year. Means what? Simple meaning is what? He has declared income as per 44 AD in the current previous year 2021, but in the next bunch of 5 years, next 5 years, he has exited the section. Then SSE shall not be eligible to opt for section 44 AD for 5 years following the year in which he has not declared income as per section 44 AD. So in our example, he exited the section 44 AD in the year 23-24. So from 23-24, next 5 years, he will not be allowed to declare income as per section 44 AD. He has to declare income as per the normal provision. Last point is section 44 AD subsection 5. It says, if SSE is covered by section 44 AD subsection 4. When you will be covered by section 44 AD subsection 4, you will be covered by section 44 AD subsection 4 if you have exited the section before 5 years. If you have exited the section before completing 5 years, then we say that you are covered by section 44 AD subsection 4. In that case, we will ask you, what is your total income? In the year of exit, we will ask you what is your total income. If your total income is more than the basic exemption limit, then we will pick you up and will drop you in the office of a chartered accountant. What you have to do? You have to maintain books of accounts as per section 44 AA, and you have to get the books of accounts audited as per section 44 AB. Yes, is that very, very clear? Yes or no? Yes. So this section is simplified for you in the form of a flow chart. In the notes, paragraph form it is given. Eligible SSE. Here it is given in a paragraph form. Eligible SSE, eligible business, limit of gross receipts, relief from the requirement of maintenance of books of accounts, quantum of deemed income, 6% of gross receipts, 8% of gross receipts. Set of provisions will apply in the normal manner. Deductions are deemed to have been allowed. Remuneration etc. to partner also deemed to be allowed. Depreciation deemed to be allowed. You calculate WDV accordingly. Disallowance deemed to have been allowed. So disallowance provisions will not apply separately. Then point number 11 is explaining you the story of staying in the section for next 5 years. And last point, you pay advance tax in only one installment. 100% advance tax you pay by 15th of March. So this section I explained you in the form of a flow chart. Now right now it is 8:48. So we still have 12 minutes to go. What I'll do now, before the break, I'll complete one more section, and that is section 44 ADA. Very small section. Now this is the replica of 44 AD. It is replica. So it will take less time. 44 ADA is also a presumptive income section. In 44 AD, I told you that in certain situations, 44 AD is not applicable. In case of certain persons, section 44 AD is not applicable. In which case section 44 AD is not applicable? Number one, for those people who are engaged in notified profession, section 44 AD is not applicable. Why it is not applicable? Because for them government has made a separate section 44 ADA. For those who are into transportation business, 44 AD is not applicable. Why not applicable? Because for them government has made a separate section 44 AE. Besides that, those who are earning income in the nature of commission or brokerage, or those who are earning income from agency business, to them also section 44 AD is not applicable, because major portion of their gross receipt is profit only. So we don't want them to declare a negligible income or minimal income of 6%, 8%. So in section 44 AD, I explained you that section 44 AD is not applicable in case of SSCs engaged in notified profession. Why? For them a separate section is made. So that section is 44 ADA. So now we are moving on to section 44 ADA. Computation of income from notified profession on a presumptive basis. So here I am dividing the SSC into two categories. Number one, SSC engaged in notified profession. SSC engaged in notified profession and SSC engaged in non-notified profession. Now don't ask me to explain you what is notified profession. We have referred that section 44 AA maintenance of books of accounts provision. Doctor, lawyer, chartered accountant, film artist, technical consultant, IT specialist, all those people are into notified profession. And those professions which are not appearing in that list will be considered as a non-notified profession. So all those people who are into non-notified profession, section 44 ADA is not applicable to them. In other words, they will have to maintain the books of accounts. If their gross receipts is more than 50 lakhs, they will have to get the books of accounts audited also. For them, this special provision is not applicable. Their income from profession will be computed as per the normal provisions. Their income from profession will be computed as per the normal provisions. In other words, section 44 ADA is applicable only in case of those SSCs who are engaged into which profession? Notified profession. So first condition is they should be engaged in notified profession. Number two condition is they should be resident in India. If SSC is non-resident, then section 44 ADA is not applicable. He will have to declare income as per normal provision. So first condition is he should be engaged in notified profession. Second condition is he should be resident in India. This is the second condition. Third condition, his gross receipt should be less than equal to 50 lakhs. Gross receipt indicates this scale of operations. If the gross receipts are less than equal to 50 lakhs, then we say that they are operating at a low scale or medium scale. If the gross receipts are more than 50 lakhs, then this professional can afford to go to a chartered accountant. So we'll ask him to declare income as per normal provisions. He'll be required to maintain the books of accounts, and he'll also be required to get his books of accounts audited as per section 44 AB. So for applying the provisions of section 44 ADA, three conditions are required to be fulfilled. Number one condition, SSC should be into a notified profession. Number two condition, he should be resident in India. And number three condition, his gross receipt turnover should be less than or equal to 50 lakhs. His gross receipts should be less than equal to 50 lakhs. In that case, we say that SSC can opt to declare income as per 44 ADA. We are giving him an option. It is not mandatory for him to go for section 44 ADA. Now say for example, SSC opts to declare income as per normal provision. Then ask him to calculate the income by applying the provisions of section 28 to section 44 DB. We don't have any objection. Income will be computed as per the normal provision because he himself has decided to go for the normal provision. SSC opts to declare income as per section 44 AD. This is the option which SSC has exercised. he has decided to declare income as per normal provision. This discussion I am dividing in two parts, part A and part B. This discussion I am dividing in two parts. SSC opts to declare income as per section 44 ADA. Then left hand side, we say that his deemed income will be gross receipts into 50% In section 44 AD, we had 8%, 6%, etc. Here we are having 50%, 50. This is the minimum income. SSC may declare a higher income. SSC may declare a higher income. This is the minimum amount of income. At least he will have to discuss this, declare this much amount of income. Now, very important point to be noted here is in section 44 AD, we had one important point saying that whatever is the amount of gross receipt turnover, etc., which is received by account pay check, account pay bank draft, ECS, etc., or other electronic mode up to the due date of filing return, on that portion of gross receipt will be applying 6% instead of 8%. So there were 2 percentages now. So account pay check, account pay bank draft, if you have done the collection from your customer by way of account pay check, account pay bank draft, ECS or such other electronic mode as may be prescribed, and that too collection has happened up to the due date of filing return, then on that portion of gross receipt you apply 6%. Here we do not have similar provision. Here in section 44 ADA, we do not have similar provision. Here the percentage is same, irrespective of whether you collect the money by account pay check, account pay bank draft, cash, credit card, debit card, bearer check, cross check, whatever it is, it will be 50% of gross receipts. Now the other part, point number 2 to point number 9, they are same as section 44 ADA. So I'll just quickly go through it. Section 30 to section 38, these provisions are not applicable. You have to declare income which is certain percentage of the gross receipt. In this case, it is 50% of gross receipt. Any other provision of the chapter of PGBP will not apply to you. All other provisions of Income Tax Act would apply. The chapter PGBP provisions will not apply. So section 30 to 38 not applicable. Sections relating to disallowance do not apply. Depreciation deemed to have been allowed. You have to calculate WDV accordingly. We will not give you separate deduction for depreciation, but it will be presumed that depreciation deduction is already given to you, and accordingly you have to calculate the WDV. Set of carry forward provisions are applicable. Salary, bonus, etc. to partner, this is deemed to have been allowed. So don't ask for a separate deduction. If you are a partnership firm, don't ask for a separate deduction for salary, bonus, commission, etc. paid to the partner. Advance tax, you have to pay 100% advance tax by 31st of March. What are the two big advantages of getting into this presumptive taxation section? You need not maintain the books of accounts and you need not get the books of accounts audited. Is that very, very clear? Yes. So left hand side part A is over. Part B. Part B in section 44 AD, what I explained you? In section 44 AD, part B was what? If you enter into the section, you have to stay into that section for 5 years. You cannot exit the section. If you exit the section, we will not allow you to re-enter the section for a period of next 5 years. Government should have made similar provision here also, but government has not made any such provision. So the provisions are inconsistent with each other. Whatever is provision in 44 AD, similar is not a provision in 44 ADA. Here we say in very simple language, here they are saying something else. They say that if SSC claims that his actual income is less than the deemed income. What is deemed income? Deemed income is 50% of gross receipts. Deemed income is income as per the section. If his actual income is less than the deemed income, if SSC claims that I have actually earned less than 50% of gross receipts and his total income is more than the basic exemption limit. Listen to me carefully. If SSC gets into this section 44 ADA, he has to declare a PGBP income of 50% of gross receipts. But if SSE says that I have actually earned less than 50% of gross receipts, so let me declare my actual income. I don't want to pay tax on 50% of gross receipts. In that case, we will ask him a question whether your total income is more than the basic exemption limit. If he says yes, then we will ask him to maintain the books of accounts, get the books of accounts audited. Then only we will allow him to declare an income which is less than 50% of the gross receipts. So what will happen now? What will happen in this section 44 ADA? Every year a notified professional would decide whether he wants to go for section 44 ADA or whether he wants to declare income as per normal provisions. If he is ready to declare income which is 50% of gross receipts, then he will go for section 44 ADA. But if he claims that I have actually earned less than that, please allow me to declare an income which is less than 50% of gross receipts, then we will ask him one question, whether your total income is more than the basic exemption limit. If yes, we will ask him to maintain the books of accounts and we will ask him to get the books of accounts audited. Only in that case, we will allow him to declare income as per the normal provisions. Is that very, very clear? So government says you get your books of accounts audited, then we will have faith on you. We don't have faith on you. You go to a chartered accountant, maintain the books of accounts, get your books of accounts audited. In that case, you can declare an income which is less than 50% of gross receipts. Yes, is that very, very clear? Any one of you are having any doubt in this provision, section 44 AD and 44 ADA? Yes, okay. So now we move on to the next section of presumptive taxation itself. Presumptive taxation, we have completed two sections now, 44 AD and 44 ADA. See in this notes, 44 AD is gone, it's over. 44 ADA is also over. Eligible SSE, limit of gross receipts, relief from maintenance of books of accounts and audit of books of accounts, quantum of income would be 50% of gross receipts. SSE can declare actual income to be higher than the presumptive income. If he says that his actual income is less than or equal to presumptive income, then he has to maintain the books of accounts and get them audited. Deductions are deemed to have been allowed. Remuneration to partner, etc. will also be deemed to have been allowed. Depreciation deduction is deemed to have been allowed. So you have to calculate the WDB accordingly. Disallowance also deemed to have been allowed. And advance tax, 100% advance tax is required to be paid by 31st of March. Now we move on to section 44 AE. Now we move on to section 44 AE. Business of plying, hiring or leasing goods carriage. Business of plying, hiring or leasing goods carriage. This also I will explain you from the handwritten notes only. This is much simplified in this flowchart form. Section 44 AE is applicable to those businesses, those SSEs who are engaged in transportation business. Section 44A is applicable in case of those SSEs who are engaged in transportation business. Transportation business means they are into the business of plying, hiring or leasing goods carriage. We are not talking about passenger carriage, we are talking only about the goods carriage. Goods carriage means you are owning a tempo, truck, etc. In this case, those SSEs who are smaller ones can take the advantage of section 44A. How do we decide whether the SSE is a small SSE or a very big SSE? That depends upon the number of vehicles owned by him. If SSE is owning more than 10 goods carriage, then he is a big SSE. He is a big SSE, he has to declare income as per the normal provisions. section 44AE is not applicable to him. 44AE is not applicable. Income will be computed as per the normal provisions. Income will be computed as per the normal provisions. Manoj is asking me, will you provide my handwritten notes? Manoj, this is notes made for you only. What I will do about this? This is made for you only. Definitely it will be provided. Today only I will share with you. Don't worry about that. This handwritten notes you need not write. This will be provided to you. Soft copy. Today itself. Don't worry. So SSC who are owning more than 10 goods carriage. SSC who are owning more than 10 goods carriage. They are bigger SSCs. Government says that to them section 44A is not applicable. They have to maintain the books of accounts as per section 44AA and they have to get the books of accounts audited as per section 44AB. So income will be computed as per the normal provisions of the Act. So who all SSC, when a SSC can take the advantage of section 44AE? Only if he is owning less than or equal to 10 goods carriage. Only if he is owning less than or equal to 10 goods carriage. If SSC is owning less than or equal to 10 goods carriage, then we can say that he is a small SSC. Government will provide him relief. What is the relief granted to him? He need not maintain the books of accounts. He need not get the books of accounts audited, provided he is declaring income which is prescribed in the section. Here also SSC is having an option. If SSC opts to declare his income as per normal provisions, then section 44AE is not applicable to him. Let him declare income as per normal provision. Let him maintain the books of accounts. If applicable, let him get his books of accounts audited. But if SSC opts to go for section 44AE, then as usual, our discussion is in two parts. Part A, Part B. What is Part A? If SSC opts to declare income as per normal, as per the provisions of section 44AE, then vehicles are required to be divided in two parts. Vehicles are required to be bifurcated in two parts. Whatever number of vehicles SSC is owning, those vehicles should be classified into two categories. Number one, heavy goods vehicles, and number two, other than heavy goods vehicles. Heavy goods vehicle means big vehicles, truck, tempo, etc. And other than heavy goods vehicle means smaller vehicles like three-wheeler, etc. Three-wheeler tempo is there, three-wheeler tempo, that is a other than heavy goods vehicle. But heavy goods vehicle or other than heavy goods vehicle is decided based on the weight of a vehicle. If it is a heavy goods vehicle, it will have a more capacity to take up the load. If it is a light goods vehicle, it can handle less goods, so it can carry less goods. So heavy goods vehicle, if your goods vehicle, goods carriage is a heavy goods carriage, then as per section 44AE, you have to declare an income which is 1000 rupees per month or part of the month. 1000 rupees per month or part of the month per ton of the gross vehicle weight or unladen weight. Unladen weight means weight of an empty vehicle. Unladen weight means weight of an empty vehicle. So you have to declare income how much? 1000 rupees per month per ton. 1000 rupees for 1 month or part of the month. Here part of the month will be considered as full month. Say for example, you purchase the vehicle on 15th of February. So up to the end of the March, it is only 1.5 month. You purchase vehicle on 15th February. So you are owning the vehicle for 15 days of 13 days of February or 14 days of February, and you are owning the vehicle in the month of March also. So you are owning the vehicle for 1.5 month. You are owning the vehicle for 1.5 month. In that case, your income would be 1000 rupees for 1 month and one more 1,000 rupees for one more month. Half month will be considered as full month. So your income needs to be calculated at the rate of 2 months. And how much is the income? 1,000 rupees per ton. If your vehicle is of say 15 tons, if your vehicle is of 15 tons, then it is 1,000 rupees per ton. So for 15 tons it will be 15,000. So your income will be deemed to be 15,000 rupees per month. And if you are owning the vehicle for 1.5 month, then your income will be deemed to be 30,000 rupees. 30,000 rupees. So heavier the vehicle, higher will be the income. If your vehicle is say 15 tons, then 1,000 per ton. Considering 1,000 per ton, your income, monthly income would be 15,000. If your vehicle is say 20 tons, ton means 1,000 kg. Ton means 1,000 kg. If your vehicle is say 20 tons, then your income will be 1,000 rupees per ton. As per 1,000 rupees per ton, your income would be 20,000 rupees per month from that vehicle. And if you are owning vehicle for 1.5 month, then it is 20,000 per month or part of the month. 1.5 month would be considered to be 2 months. Even if it is 1 month or 1 day, even if you are owning the vehicle for 1 month or 1 day, that will also be considered as 2 months, and you have to declare income for 2 months. So heavy goods vehicle income will be 1,000 rupees per month or part of the month per ton of the gross vehicle weight or amount actually earned, whichever is higher. If you say that I have earned more than this, then you will have to declare more than the income prescribed in the section. What about other than heavy goods vehicle? Other than heavy goods vehicle, the income would be 7,500 per month or part of the month. 7,500 per month or part of the month, or actual amount of income, whichever is higher. So in case of other than heavy goods vehicle, 7,500 is the fixed amount of income. In case of other than heavy goods vehicle, 7,500 is fixed amount of income. In case of heavy vehicle, it is calculated based on weight of the vehicle. In case of other than heavy goods vehicle, 7,500 is fixed irrespective of the weight. Now important point to be noted. What do you mean by heavy goods vehicle? Heavy goods vehicle means when the gross vehicle weight is more than 12,000 kgs. When the gross vehicle weight is more than 12,000 kgs, we say that it is a heavy goods vehicle. In other words, if the gross vehicle weight is less than or equal to 12,000 kgs, in other words, if the gross vehicle weight is less than or equal to 12,000 kgs, then we say it is a other than heavy goods vehicle. It is a other than heavy goods vehicle. See here, the income is required to be declared based on the number of months for which you are owning the vehicle. Whether you are a small SSE or whether you are a big SSE will also be decided based on number of vehicles you are owning. So if you are owning less than or equal to 10 vehicles, then you are a small SSE. You are allowed to get into the provisions of section 44A and declare income as per section 44A. Now the question is, while you count whether the SSE is owning less than or equal to 10 goods vehicle or not, while you count to decide whether the SSE is a small SSE or big SSE, because if he is a big SSE, he is not allowed to get into section 44A. Only small SSEs can take the advantage of section 44A. So small SSE means owning less than or equal to 10 goods carriage. Now, while you count whether he is owning less than or equal to 10 goods carriage or not, all those goods carriages, all those vehicle which you have purchased on hire purchase basis or installment system, should that also be taken into account or not? Should that also be considered or not? Answer is yes, those vehicles are also required to be considered. Those vehicles are also required to be considered. In other words, say for example, you are owning 9 vehicles plus you have acquired 3 vehicles on a hire purchase system. In that case, those 3 vehicles also you will be deemed to be the owner, and in all you are owning 12 vehicles. So you cannot take the advantage of the section. You have to exit from the section. Section is not applicable to you because you are owning more than 10 goods carriage. You are owning more than 10 vehicles. So all those vehicles which are taken on rent by you, all those vehicles which you have purchased on hire purchase system or installment system, in that case you will be deemed to be the owner of those vehicles. You will be deemed to be the owner of those vehicles. Now we move on to point number 3. Point number 3 says what? Say for example, you are owning 9 vehicles and 2 vehicles you have taken on rent. You are owning 9 vehicles and 2 vehicles you have taken on rent. Means you are paying rent for those vehicles. Can you be considered to be the owner of those vehicles? Answer is no. All those vehicles which you have purchased on hire purchase or installment system, you will be deemed to be the owner of those vehicles for the purpose of section 44A. But those vehicles which you have taken on rent, you will not be deemed to be the owner of those vehicles for the purpose of section 44A. Anyway, you are not the owner because those vehicle doesn't belong to you. You are just using it and you are paying the rent. So, vehicles which are taken on rent should not be considered as vehicle owned by the SSE. So, as per section 44AE, you have to declare how much income? You have to declare income at the rate of 1000 rupees per ton per month or part of the month in case of heavy goods vehicle and 7500 per month or part of the month in case of other than heavy goods vehicle. Section 30 to section 38 will not apply to you. All these sections relating to deductions will not apply to you. Sections relating to disallowances also will not apply to you. See, these points are common points. These points were there in 44AD also, 44ADA also. So I am not repeating, I am not re-explaining you once again. You already understood while covering section 44AD. So section 30 to 38 is not applicable. Sections relating to disallowances are not applicable. Depreciation is deemed to have been allowed. Depreciation is deemed to have been allowed. Salary, bonus, etc. to partner. Salary, bonus, etc. to partner. Deduction will be allowed subject to 40B. See, in earlier provision, in earlier section 44AD and 44ADA, I clearly told you that salary, bonus, etc. to the partner or remuneration to partner is deemed to have been allowed. You will not get a remuneration deduction. If you are a partnership firm, you are paying remuneration to partner and you are declaring income as per section 44AD or 44ADA. In that case, salary, bonus, commission, remuneration to partner will be deemed to have been allowed. You will not get any separate deduction for that. But there is no such provision clearly written in section 44A. Since there is no such provision written clearly in section 44A, people have an opinion that while we declare income as per section 44AE, we can take the deduction for salary, bonus, etc. to the partner. We can take the deduction for salary, bonus, etc. paid to the partner. What are the two biggest advantages of getting into this presumptive income section? Number one, you are not required to maintain the books of accounts, and number two, you need not get your books of accounts audited. These are the two bigger advantages of getting into any section of presumptive income. So with this, we have completed section 44AE. We have completed section 44AE. So 44AE, eligible SSE. I am in your notes now, section 44AE, page number 154 in your notes. Eligible SSE, all SSEs who are into the business of plying, hiring, leasing goods carriage. Irrespective of whether they are resident, non-resident, all of them are covered. All of them are covered. Limit of number of vehicles, not more than 10 goods vehicle. Does not own more than 10 goods vehicle. Point 3, goods carriages taken on a higher installment basis, you will be deemed to be the owner of those goods vehicles. You are exempted from section 44AA and 44AB. Means you are not required to maintain the books of accounts and you need not get the books of accounts audited. What is the quantum of deemed income? In case of heavy goods vehicle. In case of heavy goods vehicle, means vehicle whose weight, unladen weight means empty vehicle, weight of empty vehicle is more than 12,000 kgs. More than 12,000 kgs means more than 12 tons. More than 12,000 kgs means more than 12 tons. In that case, you have to declare an income at the rate of 1,000 rupees per ton per month or part of the month for the period for which vehicle is owned by you, or income which is actually earned by you, whichever is higher. You have to declare income whichever is higher. Other than heavy goods vehicle, your income will be 7,500 per month or part of the month. Other than heavy goods vehicle, your income will be 7,500 per month or part of the month per vehicle for the period for which you are owning the vehicle. So your income will be 7,500 per month or part of the month for those many number of months for which you are owning the vehicle. That would be compared with actual income, and then we'll select A or B, whichever is higher. That income you have to declare. Presumptive income based on number of months for which the vehicle is owned. Meaning of goods carriage, all these things are given. If your actual income is more than presumptive income, you have to declare higher income. If the actual income is less than the presumptive income, or you say that I have incurred a loss, in that case, we will not allow you to declare income which is less than the income which is prescribed in the section, unless and until you maintain the books of accounts and you get the books of accounts audited. Deductions are deemed to have been allowed. Deduction for salary and interest to partner will be allowed from such income subject to the limits given in 40B. Section 40B now we have not discussed, we will discuss today. WDV will be calculated in the normal manner as if the depreciation deduction is allowed. This allowance will not apply separately to you. Now friends, let's move on to the last part. I move on to the last part. Here, what if you claim that your actual income is less than the income prescribed in the section? Income prescribed in the section is what? If you are owning a heavy goods vehicle, 1,000 rupees per ton per month or part of the month. Other than heavy goods vehicle, 7,500 per month or part of the month. If you say that I have actually earned less than what is prescribed in the section, if SSC claims, here we are saying that if SSC claims that his actual income is less than the deemed income, if SSC claims that his actual income is less than the deemed income, then he should maintain the books of account and get the books of accounts audited. If SSC claims that his actual income is less than the deemed income, then he should maintain the books of accounts and get the books of accounts audited. So with this friends, section 44AE is also over. Section 44AE is over. So now let's move on to question number 16. Question number 16. Question number 16 is given on page number 155. Yes, do you want me to give you 2 minutes time to solve on your own? Or should I start the discussion? Do you want to try this question on your own? If yes, I can give you 2 minutes time. Yes. Okay. So right now in my watch it is 9:57. So I am giving you 2 minutes time. Try this question on your own. Yes, let us proceed now. Let us proceed. Mr. X commenced a business of operating a vehicle on 1st April 20. He purchased the following vehicles during the year 2021. I have got one more answer as 8,85,000. Okay. Let us ascertain the answer. Compute his income under section 44A for the assessment at 21-22. First of all, you have to check. Is he owning more than 10 goods carriage? Answer is no. 2 plus 1 is 3 plus 6 is plus 3 is 6. 7, 8, 9, 10. So he is not owning more than 10 goods carriage. He is exactly owning 10 goods carriage. So he can take the advantage of the section. Now gross vehicle weight. Everywhere if you see the gross vehicle weight is less than or equal to 12,000 kgs except the last one. 0.5 and 0.6. It is a heavy goods vehicle. 0.5 and 0.6, it is a heavy goods vehicle. All others are other than heavy goods vehicle. Point number 1 to 4 are other than heavy goods vehicle. This is number of vehicle and date of purchase is given to you. See, date of purchase is given. So for point number 1, these vehicles were acquired in the month of April 20. So we will calculate income for how many months? Here we will be taking how many months? 12 months. Yes or no? From April 20 to March 21 we will be taking 12 months. Second point, vehicles are acquired on 15 March 21. So we will be taking only 1 month. Income will be calculated only for 1 month. Vehicles which are acquired in the month of July, we will be taking how many months? 9 months. 9 months. So for point number 1 it is 12 months, April to March. Point number 2 it is March 21, only 1 month. Point number 3, from July to March, that is 9 months. Point number 4, acquired in the month of January. So Jan, Feb, March, 3 months. 3 months. Point 5, acquired in August. Acquired in August. So how many months? 8 months. 8 months. And point 6, acquired in February. So how many months? 2 months. 2 months. Is that very clear? Now you find out the income. First one is other than heavy goods vehicle. So income would be how much? 7,500. Half of the month will be considered as full month, na? Mr. Gaurav, half of the month will be considered as full month. Even if it is 1 day extra, it will be considered as full month, na? Have you understood this? Now I have got multiple answers. 430, 500, 680 to 500, 1 lakh 80. Okay. Now let's find out for serial number 1. What will be the income? 7,500 multiplied by 2 multiplied by 12. Give me the amount. 7,500 multiplied by 2 is 15,000. Multiplied by 12 is 1 lakh 80. 1 lakh 80. For the second point, 7,500 into 1 into 1. 1 vehicle, 1 month. So second is 7,500. Third, 7,500 into 3 into 9. Into 3 into 9 will be 2 lakhs 2,500. 2 lakhs 2,500. Fourth point is 7,500 into 1 into 3. That is 22,500. 22,500. Fifth will depend upon the weight of the vehicle, and income will be at the rate of 1,000 rupees per ton. 1,000 rupees per ton per month. So in point number 5 as well as 6, the weight of the vehicle is how much? Weight of the vehicle is 15,000 kgs, that is 15 ton. Anything more than 12 tons considered as heavy goods vehicle. So 15 ton, income is 1,000 rupees per ton. For 15 ton, it will be 15,000. It will be 15,000. 15,000 multiplied by 2 vehicles, that is 30,000 per month, multiplied by 8 months. So it will be how much? 2 lakh 40. Yes or no? So income will be 15,000 per month, 15,000 per month per vehicle, multiplied by 2 vehicles is 30,000 per month. For 8 months it is 2 lakh 40. And the last one, 15,000 multiplied by 1 vehicle, multiply by 2 months, that is 30,000. 30,000. Now you take up the total. What is the total? 6,82,500. 6,82,500. Yes. Have you all understood? It is nothing. It is very simple. It is a game of multiplication and addition. That's all. Once you have understood the provision, it is a game of multiplication and addition. That's all. Now let's move on to the last sentence. It says, would your answer change if the two light goods vehicles were purchased in April 20 were put to use in July 20? Vehicles were acquired in April, but they were put to use in July. Will your answer change? So your answer should not change. Why it should not change? Because the income is calculated based on number of months for which you are owner of the vehicle. Income is calculated based on the number of months for which you are owner of the vehicle. Whether the vehicle is put to use or not put to use, those things are irrelevant. If you are owning vehicle, that vehicle is lying idle, you have not used for the entire year, then also you have to declare income as per section 44AE. If you go for section 44AE, then you have to declare income as per whatever rate is written in this section, irrespective of whether the vehicle is used or not used. So, why such thing? Because income is ascertained based on number of months for which you are owner. Now say for example, out of 12 months, your drivers were on strike for 2 months. The drivers who are riding the vehicles, they were on a strike for 2 months. So actually your vehicles were used only for 10 months. Income could have been generated only for 10 months. But still, you have to calculate income for 12 months only if you go for section 44A. So irrespective of the usage of vehicle, income is required to be declared based on number of months for which you are owner of the vehicle, irrespective of whether the income is used or irrespective of whether the vehicle is used or not used. If you are owner, you have to declare income as per this section. That's all. Rizwan says, sir, please explain point 5 and 6. Rizwan, what is the income? Heavy goods vehicle, what is the income? 1,000 rupees per ton, correct? So here the vehicle is how much? 15,000 kg means 15 ton. For every 1 ton you have to take an income of 1,000 rupees. So for 15 tons, income would be 15,000 rupees per month. So 15,000 per month multiplied by 8 months is 1,20,000 and multiplied by 2 vehicle is 2,40,000. Yes or no, Rizwan? Okay. So now let me proceed further. Question number 16 is over. Question number 16 is over. Now, one question I have not discussed with you. Question number 14. That we'll discuss later. Question number 14 we'll discuss later. Right now I move on to last section, that is section 40B. That is section 40B. If I have something in handwritten notes, I'll explain from there only. We have already discussed now provision for gratuity from the notes only. We discussed that provision for gratuity from the notes. I explained you with the help of journal entries. So in this handwritten notes, journal entries are also there. Okay. So I don't have it. I'll write something here. We are discussing which section? Section 40B. Here there is a partnership firm and there are partners. See, partners are rendering services and partners have also provided the funds. So firm would pay reward for this. What is the reward for services? Reward for services is nothing but salary. Instead of word salary, you can say bonus, or there can be commission, or there can be remuneration. And what is the reward for funds, providing funds? It is nothing but interest. Interest on capital or interest on current account. So firm may pay salary, bonus, commission, remuneration, interest on capital, interest on current account balance to the partner. All these things for the firm, it is an expense. For the partner, same salary, bonus, commission, remuneration, etc. It is an income. Here section 28 is applicable. Section 28 of the head PGBP is applicable. Here deduction is allowed to the partnership firm with respect to salary, bonus, commission, remuneration, etc. There is no specific section to claim deduction. So deduction can be claimed in section 37 subsection 1. Along with that, we have certain restrictions in section 40 clause B. So right now we are moving on to discuss this section 40 clause B. What are the restrictions? What are the restrictions? Yes, have you understood this? So we will be discussing from the point of view of firm, not from the point of view of partners. From the point of view of firm, I will be discussing. Part 1. Let us have a discussion of interest on capital or interest on loan given by the partner to the firm or interest on current account balance. It can be interest on capital, interest on loan given by the partner to the firm, or it can be interest on the current account balance. Now, this interest is an expense for the firm. This is an expense for the firm. Since it is expense for the firm, they would ask for deduction. Section 40B says deduction is allowed. Deduction is allowed subject to 3 conditions. Subject to fulfillment of 3 conditions. Condition number 1, your partnership deed should allow the payment of interest. Your partnership deed should allow the payment of interest. Means in your partnership deed, there should be an interest clause. There should be an interest clause which says that yes, partnership firm is going to pay this much amount of interest to partner. If the partnership deed is silent and if partnership firm is paying interest to partner, then entire amount of interest paid by firm to the partner will be disallowed. Entire amount of interest paid by the firm to the partner will be disallowed. So whatever interest on capital, interest on loan, interest on current account balance is paid by the partnership firm to the partner is considered as an expenditure for the firm. Firm would like to claim deduction. Deduction will be allowed in section 37 subsection 1 subject to fulfillment of conditions which are given in section 40B. So section 37 subsection 1 is giving you deduction, but it says deduction will be allowed subject to conditions given in section 40 clause B. The first condition says that your partnership deed should allow for the payment of interest. If your partnership deed is silent with respect to payment of interest, it does not mention anything about the payment of interest, and thereafter, and then in such case, if the partnership firm pays the interest to the partner, then entire amount of interest will be disallowed to the firm. Entire amount of interest will be disallowed to the firm. Second condition, maximum rate of interest is 12% per annum. 12% per annum. In other words, partnership firm can pay interest at whatever rate they want, but if they are paying interest at a rate which is higher than 12%, say for example, partnership firm is paying interest to the partners at what rate? 15%. 15% on capital. So are they paying more than 12%? Yes. How much more? 3% more. So that 3% amount will be disallowed to the firm. That 3% amount will be disallowed to the firm. Have you understood this second condition? Yes. First and second condition, is that very, very clear? Are you all getting my voice? First and second condition, is that clear? Yes. So, first of all, your partnership deed should allow the payment of interest. Partnership deed should allow the payment of interest means partnership deed should approve the payment of interest. And second, the rate of interest should not exceed 12% per annum. If it is exceeding 12% per annum, then what? Then deduction will be allowed to the firm to the extent of 12% per annum. Excess interest will be disallowed to the firm. Excess interest will be disallowed to the firm. Third condition, listen to me very carefully. Say for example, Manoj completed his chartered accountancy and along with his two friends, he has started a partnership firm. Manoj has completed his chartered accountancy along with his two friends, he has started a partnership firm. Now, the partnership deed did not mention anything about the interest on capital. For example, Manoj started his firm in the previous year 1920 or maybe in the previous year 1819. So for these 2 years, firm did not pay interest to partner. Interest is not paid by firm. Partnership deed is silent about the payment of interest and partnership firm is not paying any interest to the partner. If partnership firm is not paying anything, then nothing can be allowed as deduction to the firm. Now, later on, during the previous year 2021, Manoj came to know that we can save tax. Manoj came to know that we can save tax. How we can save tax? Now, we can ask the partnership firm to pay interest on capital to the partner. And that amount of interest which is paid by the firm will claim deduction. And on that amount of interest, partner will have to pay the tax. How tax will be saved? Firm's income is taxable at the flat rate of 30%. Firm's income, partnership firm's income is taxable at flat rate of 30%. And partner's income is taxable at slab rates. For example, if partnership firm is having an income of 10 lakh rupees, then firm has to pay 30% tax on that 10 lakhs, that is 3 lakh rupees. On the other hand, if an individual partner is having an income of 10 lakh, then he has to pay tax of 1,12,500. So in the hands of the firm, tax will be levied at a higher rate. In the hands of the partner, tax will be levied at a lower rate. Therefore, what Manoj did now, in previous year 2021, He called up his remaining two partners and he explained both the partners that if the partnership firm pays interest to us, then partnership firm can claim deduction, and that interest will be taxable in our hands. So partnership firm will claim deduction, firm's total income will be less, firm's tax liability will be less. And since this interest will be taxable in our hands, we will have to include this income in our hands under the head PGBP. But our total income is taxable at slab rate, so tax will be saved. So if both partners are saying that this is a good idea. So now what they are doing now, in the previous year 2021, they have amended the deed. They have amended the partnership deed. They have amended the partnership deed. Partnership deed is amended with retrospective effect from 1st April 18, saying that interest will be paid at the rate of 12% per annum. Interest at the rate of 12% per annum will be paid. See, previous year 18-19, previous year 19-20, partnership deed was silent with respect to payment of interest, and interest was not paid by the firm to the partner. During the previous year 2021, partner came to know that if the interest is paid by firm to the partner, firm's tax liability will reduce and partner's tax liability will increase. But on an overall basis, tax will be saved because income of the firm is taxable at flat rate of 30%, whereas income of the individual partner is taxable at slab rates. So if firm's income is 10 lakh, firm has to pay tax at 30%, which is 3 lakhs. But if same 10 lakh income is shown in the hand of the partner, then he has to pay tax of only 1,12,500. So there is a tax saving. To what extent? 3 lakh minus 1,12,500. That is 1,87,500 tax is saved. So with the intention to take the advantage of this, Manoj along with his partners, they have amended the partnership deed in the year 2021, but this deed is amended with retrospective effect from 1st April 18, and in the deed they have written that firm will pay interest to the partner at the rate of 12% per annum. Now during this period of 2021, they have paid interest for 3 years. Which 3 years? From 18-19 to 2021. Question is, can they claim deduction for the interest paid for 3 years? If they debit their profit and loss account as interest on partner's capital and paid for all the 3 years at one time, can they claim deduction for all the 3 years? Government says no, we will not allow deduction for the first 2 years, because during those first 2 years now partnership deed was silent. Partnership deed did not mention anything about the payment of interest. So even if you change the partnership deed retrospectively now, we will not allow you deduction retrospectively, we will allow you deduction prospectively. For example, partnership deed was changed on 1st April 20, then we will allow you deduction for interest from 1st April 20 only. In other words, for the year 18-19, for the year 19-20, you cannot claim deduction. Have you understood this? So interest should be paid for period which is falling after the date of deed. If the deed was silent, thereafter the deed was amended, then the interest should be paid for the period which is falling after the date on which the deed was amended. In other words, in simple language, they are saying you that if earlier deed was silent and then you amended the deed, then you will be getting deduction for interest on loan on a prospective basis today onwards, from the date on which you have paid the interest, from the date on which the partnership deed is amended. from that date onwards, from that year onwards, you can claim deduction for interest. For the past years, you cannot claim deduction for interest. Is that very, very clear? So interest paid by the partnership firm to the partner is allowed as deduction under section 37 subsection 1, subject to fulfillment of three conditions. Number one condition, interest partnership deed. I am summarizing, na? Mr. Redmi, I am summarizing. Interest on capital, interest on current account balance, interest on loan given by the partner to the partnership firm. Capital is given by partner to the firm, current account balance is lying, or loan is given by partner to the firm. On that, firm can pay interest and firm can claim deduction under section 37 subsection 1, subject to fulfillment of three conditions. Number one condition, the partnership deed should clearly mention that yes, interest will be paid and this will be paid at what rate. So partnership deed should approve or should allow the payment of interest. That is the first condition. Second condition, the rate of interest should not exceed 12% per annum. Rate of interest should not exceed 12% per annum. If it is exceeding 12% per annum, then excess will be disallowed to the firm. And the third point is, interest should be paid for a period which is falling after the date of the deed. Interest should be paid for a period which is falling after the date of the deed. Meaning thereby, we will allow deduction for interest on capital, interest on loan, etc. on a prospective basis, not on a retrospective basis. Have you understood this? So there are three conditions subject to which deduction will be allowed for interest on loan. This was part 1. Now we move on to part 2. Part 2 we are talking about salary, bonus, commission or remuneration. Salary, bonus, commission or remuneration. This is also an expenditure for the firm. Deduction will be allowed to the firm. This is also an expenditure for the firm. Deduction will be allowed to the firm. It is an expense for firm. Whether the deduction is allowed? Yes, deduction is allowed under section 37 subsection 1, subject to section 40B. Here we have four conditions. Condition 1, partnership deed should approve payment of remuneration. Partnership deed should approve the payment of remuneration. This first condition is same, na? There is no change. In interest also we have the same condition. Partnership deed should allow for the payment of interest. In remuneration also we are having the same condition. Same condition 1. Partnership deed should allow for the payment of remuneration. This is the first condition. Have you understood this first condition? Same, there is no change. Remuneration, second condition. Remuneration should be paid within limits given under section 40B. There are certain limits which are given in section 40B. Remuneration should be paid as per that limit only. What is the maximum limit for payment of interest on capital? 12% per annum. 12% per annum. Similarly, here also we have certain limit. So remuneration should be paid within that limit. If remuneration is paid more than the limit, then whatever extra remuneration is paid, that will be disallowed to the firm. If the remuneration is paid beyond the limit, then excess remuneration will be disallowed to the firm. How much is the limit, that will understand. How much is the limit, na, that will understand. Limit is based on the book profit. Limit is based on what? Limit is based on book profit. For example, this is the table. See, interest we are having three conditions. This is part 1 discussion. Interest. We are having three conditions. It should be authorized by the partnership deed. It should be for the period falling after the date of the deed. That is, deduction will be allowed on a prospective basis. And the rate of interest should not exceed 12%, simple rate of interest. Three conditions are there in interest. In remuneration also, in remuneration we have four conditions. In remuneration we have four conditions, but out of four conditions, three conditions are same as interest. What is the first condition? Payment of remuneration should be in accordance with the deed. In accordance with the deed. Number two, the remuneration should be paid for a period which is falling after the date of the deed. Means the remuneration payment will be allowed on a prospective basis. If your partnership deed was silent with respect to payment of remuneration and you have not claimed any remuneration as deduction, you have not paid any remuneration to partner, thereafter after few years you are paying remuneration retrospectively, then we are not going to give you deduction on a retrospective basis. We are going to give you a deduction only on a prospective basis. Prospective basis means from the period from which your partnership deed has changed. Third condition is remuneration should be paid within the prescribed limit. This is the maximum limit for remuneration, and this maximum limit is ascertained based on the book profit. Maximum limit is ascertained based on what? It is ascertained based on book profit. Now question is, what do you mean by book profit? What do you mean by book profit? That we will understand right now. What do you mean by book profit? That we will understand right now. First of all, let us refer these limits. Remuneration, bonus, commission, etc. should be paid by the partner to the partnership firm. Should be paid by the firm to the partner, and it should be within the prescribed limit. These limits are based on the book profit. What do you mean by book profit? Book profit means profit calculated as per the provisions of Income Tax Act after giving effect to all the provisions of the Act except remuneration. See, you know that starting point of your solution is net profit as per profit and loss account. To that net profit as per profit and loss account, give effect of all the adjustments. All addition related adjustments should be added, subtraction related adjustments should be subtracted. Besides, in your debit side of profit and loss account, if interest on capital or interest on loan to partner appears, then whatever interest is beyond 12%, that should be added, that should be disallowed. Thereafter, whatever remuneration is debited to profit and loss account, entirely it should be added. Thereafter, whatever amount is arrived, that will be called as business income before remuneration. But in income tax, it is termed as book profit. See friends, if you remember section 35 scientific research, in section 35 scientific research also, when the asset which was acquired for scientific research and subsequently that asset was sold, I explained you three cases, case 1, case 2, case 3. There also I showed you that the solution will start with net profit as per profit and loss account. We will do all the addition related adjustment, subtraction related adjustment. Thereafter, the amount which is arrived is called as PGBP income before deduction under section 35. From that, you claim deduction under section 35 and you will arrive at the amount of PGBP income after deduction under section 35. Similarly, here also, your solution will start with net profit as per profit and loss account. Addition related adjustments will be added. Subtraction related adjustments will be subtracted. If interest is paid to the partner and the rate of interest is more than 12%, then whatever is the excess interest will be added, and whatever remuneration is paid to the partner and debited to P&L account, that entire remuneration will be added. So after doing all this adjustment, whatever amount of profit is arrived, whatever amount of income under that PGP is arrived, that will be called as book profit. That will be called as what? Book profit. So what do you mean by book profit? Book profit means profit calculated by applying the provisions of Income Tax Act after giving effect to all adjustments. After giving effect to all adjustments except remuneration. Except remuneration. Have you understood the meaning of book profit? Yes or no? The maximum remuneration which a partnership firm can pay to the partner is certain limits which is calculated based on the book profit. So first of all, you should know what is book profit. Book profit is nothing but profit calculated by applying the provisions of Income Tax Act. Profit calculated by applying the provisions of Income Tax Act. It is net profit as per profit and loss account. To that, all the addition as well as subtraction related adjustments will be done. So we will arrive at the amount of book profit. So book profit means not profit as per accounts. Don't get misled by this word book. The word book doesn't indicate, it does not mean books of accounts. Book profit means profit as per income tax after giving effect to all the provisions of the Income Tax Act, PGBP chapter, after giving effect to all the provisions of PGBP chapter except the remuneration. Whatever amount is derived, that will be termed as book profit, and based on book profit, you have to ascertain what is the maximum limit for remuneration deduction. What do you have to ascertain? What is the maximum limit for remuneration deduction? I'll take an example to make you understand how to calculate the limit. That is all we will understand. Say for example, let me take an example. There is net profit as per profit and loss account. Say for example, it is 5 lakhs. Then you will do all addition related adjustments. So you will add something. Then you will deduct something. You will deduct something. In this addition, interest will be added to the tune it is in excess of 12%. Remuneration will be entirely added. Thereafter, the amount which is arrived is called as book profit. Is called as what? Book profit. Now let me say that this book profit is 4,13,200. I am just giving you the number. 4,13,200. This amount is arrived. So now our objective is to find out what is the maximum amount of remuneration which a partnership firm can pay to the partner. For that, they have created a limit based on book profit. Now our book profit is 4,13,200. This book profit is required to be divided in two parts. If there is a loss or there is a profit up to 3 lakhs, either there is a loss or there is a profit up to 3 lakhs. And number 2 part is book profit beyond 3 lakhs. Book profit beyond 3 lakhs. So can you tell me what will be my amounts? My book profit is required to be divided in two parts. Na? So left hand side what I'll write? Left hand side I'll write 3 lakhs. Right hand side what I'll write? 413,200 minus 3 lakhs. That is 1,13,200. 1,13,200. You are understanding this, na? This book profit is arrived after giving effect to all adjustment except remuneration. Whatever remuneration is appearing on the debit side of profit and loss account is added back. Thereafter, you arrived at the amount of book profit. Now, based on the book profit, you will try to find out what is the maximum remuneration which a partner should pay to the firm. For that, you have to bifurcate your book profit into two parts, part 1, part 2. Part 1, Instead of book profit, if you have a book loss, or if you are having a book profit up to 3 lakhs, then you put the amount on the left hand side. If you have a book profit beyond 3 lakhs, then up to 3 lakh you put the amount on the left hand side, excess amount you put it on the right hand side. What is the limit for left hand side? Book profit multiplied by 90%. So 3 lakh multiplied by 90%, that is 2 lakh 70. This 2 lakh 70 will be compared with 150. This will be compared with 150. And we will select whichever is higher. So in this case, what is higher? 270 is higher. So whatever book profit is appearing on the left hand side, on that you have to apply 90%. In our example, it is 3 lakhs. Why? Because my book profit is more than 3 lakhs. If my book profit is only say 2 lakhs, then left hand side only amount will come. And on that 90% will give me 1 lakh 80. It will give me 1 lakh 80. So right now my book profit is more than 3 lakhs. So up to amount of 3 lakhs now I will put on the left hand side. So on that 3 lakh I will calculate 90%. I get amount of 270. That 270 will be compared with 150 and then I would select whichever is higher. You may feel that, sir, generally 270 will only be higher. No, it is not necessary. For example, your book profit is only 1 lakh rupees. If your book profit is 1 lakh, 90% of that is 90,000. So 90,000 will be compared with 1 lakh 50. So 1 lakh 50 will be higher. 1 lakh 50 will be higher. So it is not necessary that 90% of the book profit will always be higher. So you take 90% of book profit, compare it with an amount of 1 lakh 50, then you select whichever is higher. That is the amount for left hand side. And right hand side, whatever amount is appearing now, you apply 60%. 60%. So can you tell me what is the amount? 1,13,200 multiplied by 16% will give you what amount? Yes. 113,200. %60 of that is 67,920. 67,920. Now I will add both these amounts. 270 plus 67,920. This will give me how much? 3 lakhs 37,920. This will give me 3 lakh 37,920. Have you understood this much? Yes, have you understood the calculation? It is very simple. Now this 3,37,920 is the maximum limit for remuneration deduction. This is the maximum limit for remuneration deduction. For example, you actually paid a remuneration of only 2 lakhs. Partnership firm actually paid a remuneration of only 2 lakhs. In that case, while you calculated your book profit, 2 lakhs might have been added back. 2 lakhs might have been added back. You might have ascertained your book profit. After ascertaining your book profit, you have calculated the maximum limit. That maximum limit is 337,920. That 337,920 will be compared with the actual remuneration. This 337,920 is a maximum limit that will be compared with the actual remuneration. This 2 lakhs in your case. So we'll compare the actual remuneration with the maximum limit, and then we'll select whichever is lower. And that amount will be allowed 2 years deduction. So that amount you should deduct from your PGBP income. That amount you should deduct while calculating your PGBP income. Is that very clear? Yes or no? So I explained you 3 conditions till now. Condition 1, payment of remuneration should be approved by the partnership deed. Condition 2, it should be within the prescribed limits. Condition 3, prospective deduction. Deduction will be allowed on prospective basis. No deduction for the past period. No deduction for past period. Let me move on to the last condition. Last condition is payment of remuneration should be done to a working partner. So if you are paying remuneration to working partner, then you can claim deduction. On the other hand, if you are paying remuneration to non-working partner, ideally non-working partner should not be paid any remuneration. But if at all you are paying some remuneration to non-working partner, you might debit your profit and loss account with the amount of remuneration which you might have paid to a non-working partner. But government says we are not going to give you any deduction because actually non-working partner is not working now, so he is not eligible to get any remuneration. So we are not going to give you deduction if you have paid the remuneration to the non-working partner. So deduction will be allowed only when the remuneration is paid to a working partner, and that too deduction will be allowed within the prescribed limit. So here in case of remuneration we have 4 conditions. One condition extra is what? Remuneration should have been paid to the working partner. Remuneration should have been paid to the working partner. So friends, with this section 40B discussion is over. Remuneration should be paid to the working partner. With this section 40B discussion is over. Question number, we have one question on this. We will discuss the entire question in the class. We will solve in the class itself. Now in this chapter we are left with 2 questions. One is question number 17, which is based on section 40B remuneration interest to partner, and then we have question number 18, which is based on cash system accounting. Receipt and payment account is given to us in the question. Both the questions I will discuss with you in detail, and we will solve this question in the classroom only today. Besides that, now I am left with only one question. I think it is question number 14. I do not recollect, but did I give you question number 14 to try at home? Yes? Had I given you question number 14 as part of homework? I am not recollecting. Or not given? Not given. So do one thing. Question number 14 now, you can take it as part of homework. Or do you want me to discuss right now very quickly? Do you want me to discuss right now very quickly? Yes, okay. So what you can do? You can put the markings. I will discuss this question with you. You can put the markings, and on the calculator you can ascertain the answer and give it to me. You just calculate the answer on a calculator and give the amount to me. I will do the discussion with you. Question number 14. Question number 14, 17, 18, 3 questions are left. That's all. Once we complete these 3 questions, this chapter will come to an end, and today itself we will move on to the next chapter. Today itself we will move on to the next chapter, that is chapter of income from salaries. Chapter of income from salaries. Mr. Y carries on his own business. Mr. Y is carrying on his own business. The analysis of his trading and profit and loss account for the year ended 31 March 21 is as follows. Net profit is 11,20,000. Net profit is 11,20,000. So this is the starting point of your solution. You know that this 11,20,000, which is the net profit, is the starting point of your solution. Now it says following incomes are credited to the profit and loss account. Following incomes are credited to profit and loss account. Number 1, dividend from UTI. This dividend from UTI is taxable under income from other sources. Interest on debentures. This is also taxable under income from other sources. Winning from races. This is also taxable under income from other sources. So all these incomes are already credited to profit and loss account, but they are not taxable under that PGBP. They are taxable under IFOs. So we need to remove all this income from here. For removing all this income from here, what should we do? We should deduct. So I am deducting 22,000, 17,500 and 15,000. So what you can do? You can simultaneously do the calculation. In your calculators you can type 11,20,000 minus 22,000 minus 17,500 minus 15,000. Point 1, point 2 both are over. Point 3 says it was found that some stocks were omitted to be included both in the opening stock and closing stock. Stock omitted to be included means you have not taken some amount of stock in your opening stock as well as closing stock. We can say that it is nothing but under recording of stock. Undervaluation will not be the correct term. Under recording the stock. See, opening stock is the item of expense. If you under record, if you record less opening stock, what is the consequence? If you record the expenditure to be a lower amount, your profit will increase, but your profit has increased wrongly. So what should we do? This opening stock is written in the books less by 8,000. So 8,000 less is appearing on the debit side. 8,000 less is appearing on the debit side. If you record less expenses, your profit will naturally increase. But your profit has increased wrongly. So what do you have to do? You have to deduct. You put the minus sign here. Against 8,000, put the minus sign. Next is undervaluation of closing stock. Closing stock is an item of income. On the credit side, if you pass an entry for a lower amount, on the credit side, if you pass an entry for a lower amount for closing stock, your income will appear to be lower. Your net profit will appear to be lower, but it is appearing lower on the lower side wrongly, na? So what we need to do? We need to increase. We need to increase. So we should add. We should add this 12,000. This adjustment you are not done for. You are not doing for the first time. In the previous question also same adjustment you did. Next, point number 3 is over. Point 4. 1 lakh was debited to profit and loss account being contribution to university approved and notified under section 35 subsection 1 clause 2. This amount is already debited and this amount scientific research deduction is allowed. Deduction is allowed and this is already debited. So what should we do? We should ignore. We should ignore. Point number 4 we should ignore. Why this point number 4 is inserted in the question? Na? Up to last year, weighted deduction was allowed. In past years, weighted deduction was allowed. Now, weighted deduction is not allowed. So, you have debited your profit and loss account by 1 lakh and you are going to get a deduction of only 1 lakh. So, while calculating net profit, this 1 lakh is already deducted. So, what should we do now about this 1 lakh? Yes. Should we add, should we deduct or should we ignore? This is expenditure debited to profit and loss account. Deduction is allowed under that PGBP. It should be totally ignored. So point number 4 we should ignore. Point number 5. Point number 5 says what? Salary includes 20,000 paid to brother, which is unreasonable to the extent of 2,500. Excess payment to relative. How much? 2,500. Mr. Arun, this 2,500 should be added back or it should be deducted? This is disallowed, na? So we should add, na? Put the plus sign. Put the plus sign. Next, advertisement expenses include 15 gift packets of dry foods costing 1,000 rupees per packet presented to important customers. See, you have gifted dry foods. You have gifted dry fruits to the important customers. Don't you feel it is an expenditure relating to business? Definitely yes. So deduction should be allowed in section 37 subsection 1. Deduction should be allowed in section 37 subsection 1. Therefore, we should ignore it because they have already debited to their profit and loss account. So we should ignore. Point number 7. Total expenses on car was 78,000. So there is a car. On that car, SSC might have incurred the expenditure for repairs, maintenance, etc., fuel cost, driver salary. So related to car, all these expenses might have been incurred. Now this point says total expenditure of 78,000 was incurred. The car was used both for business and personal purpose. 3/4 was used for business purpose. 3/4 was used for business purpose. So that should be allowed as deduction. To what extent it was used for personal purpose? If 3/4 it was used for business purpose, for personal purpose it was used to what extent? 1/4. 1/4 of this 78,000 will be how much? 1/4 of 78,000 will be 19,500. So 19,500 is a personal expenditure. 19,500 is a personal expenditure. This should be disallowed. So this is required to be added back. Is that very clear? Next point says miscellaneous expenses include 30,000 paid to AN company, a goods transport operator in cash on 31st January 21 for distribution of company's product. Yes, when you make payment to a transporter, cash payment is allowed up to 35,000. Nothing will be disallowed in section 40 capital A 3 because the limit is 35,000 and not 10,000. In case of payment to transporter, limit is not 10,000, it is 30,000. It is 35,000 rupees. So here you have paid only 30, so it will be allowed as deduction. It is already debited, so we should ignore. Point number 9. Depreciation debited in the books is 55,000. Depreciation debited in the books is 55, na? So this is accounting depreciation. Accounting depreciation cannot be claimed as deduction. This should be added back. On the other hand, you also have the depreciation as per the income tax rules. This should be deducted. So depreciation is not required to be calculated. Examiner has calculated depreciation as per the Income Tax Act and he has given you the amount. So accounting depreciation you add, income tax depreciation you deduct. Last point says personal expense of 10,000 have been debited to P&L. So this amount is required to be added. Personal expense of 10,000 is debited to P&L. This deduction will not be allowed. So this 10,000 is required to be added back. Compute the taxable PGBP income. Yes. Any one of you can give me the amount? Yes, 11,06,500. 11,06,500 is the correct amount. 11,06,500 is the correct amount. It was which question number? 14. 1120. Excess remuneration to brother 2,500. Car expenses 19,500. Depreciation as per Income Tax Act 55,000. Personal expense debited to P&L account 10,000. Dividend from UTI, interest on debentures winning from races. Closing stock omitted to be recorded 12,000. Opening stock omitted to be recorded 8,000. Depreciation as per income tax 50,000. This should not appear here. So this amount should change. It should be how much? 11 lakhs 6,500. That is the correct amount. See this scientific research now, earlier it was a weighted deduction 150%. Therefore I am having some different answer, but the correct answer is 11,06,500. Yes. Someone told me that this point number 3 is not understood. Mr. Redmi, this point was also covered in the earlier question. Same point was also covered in the earlier question, question number 12. You can't hear me? Redmi, are you getting my voice? What about others? Are you all getting my voice clearly? Yes or no? Yes. What about Mr. Redmi? Mr. Redmi, I think he is not getting the voice. I think he is not getting my voice. Let him re-log in. But for others, yes, question number 14 is clear. Or you have any doubt? No. So let's move on to question number 17. We move on to question number 17, second last question, and then we'll move on to question number 18. That is, question number 18 will be based on cash system accounting. So my target is to complete these both questions, and then we'll move on to chapter of income from salaries. So question number 17 and question number 18. Right now it is 11:04. So 26 minutes. 26 minutes. Let us try to catch up with these questions and let us try to complete these questions in a span of 26 minutes. Unnecessarily, I will not increase the speed. You should understand everything. Let's move on to this question number 17. Simultaneously, you can add, you can less. Redmi, point number 3 you have not understood, na? I will explain you. When, na? At the time of break. We'll be having a break at what time? 11:30. From 11:30 to 12 we'll be having a break, and then we'll have a 2-hour session from 12 to 2. So I'll explain you that point number 3 in the break. That point is already covered in the earlier question also. In question number 12 also similar point was covered. Overvaluation of stock. In question number 12 it was overvaluation of stock. Here it is undervaluation of stock. That is the only difference. Still, I will explain you, not now. So let's move on to question number 17 for the time being. It says compute the book profit. They are asking you to do what? They are asking you to compute the book profit. First of all, you compute the book profit, and you also compute the maximum remuneration which can be paid to the partner under section 40 clause B. So point 1, you ascertain the book profit. Point 2, you also get us the amount of maximum remuneration which can be paid to the partners as per the limits which are prescribed in section 40 clause B from the profit and loss account submitted by the firm consisting of 2 partners, namely A and B. See, in this profit and loss account, what is my net profit? 80,000 rupees. This net profit of 80,000 is the starting point of my solution. So you can type this 80,000 in your calculators. Next, cost of goods sold is an expenditure relating to business, deduction should be allowed. Office salary is an expenditure relating to business, deduction should be allowed. So cost of goods sold and office salary both will be ignored. Interest on loan from a minor son of partner. See, loan is not taken from partner. Loan is taken from minor son of partner. So you cannot apply the limits given in 40B. Limits given in section 40 clause B are applicable only when you are paying interest to partner. But yes, if you have given interest, if the firm has paid interest to some related person, for the firm all the partners are considered as a related person, na? And all the relatives of the partner will also be considered as a related person for the firm. Do you recollect section 40 capital subsection 2 excess payment to relative? Excess payment to specified person. For a partnership firm, who all are specified person? All the partners are specified person, and all the relatives of the partner are also considered as a specified person for the firm. So, if loan is taken from minor son of partner A and interest is paid at the rate of 24% per annum. If the rate of interest going on in the market is also somewhere around 24%, na, then section 40 capital A subsection 2 will not apply. But if rate of interest going on in the market is 18%, and we have paid 24% to partner's child, in that case excess payment 6% will be disallowed. Now question is not mentioning anything about the rate of interest going on in the market. So we cannot find out whether it is excess payment or not. But more of the story is, on this we are not going to apply section 40 clause B. Section 40 clause B is applicable only when you are paying interest to partner. Section 40 clause B is applicable only when you are paying interest to partner. So here 40 clause B will not apply. Deduction is allowed. Since deduction is allowed, we will ignore this. We will ignore this. Next point says, interest on term loan for purchase of machinery at the rate of 24%. See, here it is a term loan taken for purchase of machinery. From whom term loan is taken? It is not given. Not given means it might have been taken from bank or a financial institution. You have taken a loan from bank or financial institution for purchase of machinery, and the rate of interest in that loan is how much? 24% per annum. You can connect this point to the previous point and conclude that interest paid to the partner's minor child is not in excess. It is within the market rate of interest. It is not in excess. So nothing should be disallowed in section 40 capital A subsection 2. Are you understanding? Yes or no? You have taken term loan for purchase of plant and machinery from the bank, na? To bank also you are paying 20%, 24% per annum interest, and to the partner's minor child also you have paid an interest of 24%. So have you paid anything excess to the partner's minor child? Answer is no. So nothing will be disallowed. Nothing will be disallowed. Interest on term loan should be allowed as reduction because the term loan is taken for purchase of machinery. Purchasing machinery means loan is utilized for the purpose of business or profession. Next point, it says office rent. Office rent is an expenditure relating to business. Office rent is an expenditure relating to business. Office rent deduction is allowed in section 3030. So what should we do? We should ignore. Commission to working partner A. This commission is nothing but remuneration only. Salary, bonus, commission, remuneration is everything one and the same. So we are going to add back the entire amount of remuneration as of now. We will add back the entire amount of remuneration. Thereafter we will calculate the book profit. Based on the book profit, we will ascertain the maximum limit for remuneration. That maximum limit for remuneration will be compared with the actual remuneration. Whatever is lower out of the actual remuneration, maximum limit will be allowed as deduction. So as of now, entire remuneration will be added back. Interest on loan to partner B, who is the non-working partner, at the rate of 12%, at the rate of 24% per annum. See, you cannot pay remuneration to non-working partner, but definitely you can pay interest to the non-working partner because he also might have provided the funds in the form of capital loan, etc. to the firm. So that working non-working condition is applicable only in case of remuneration. It is not applicable in case of interest. Now, here they have paid interest to the partner on the loan amount at the rate of 24% per annum. Section 40 clause B is putting a restriction at what rate? 12%. They say that interest should not be paid beyond a limit of 12%. If it is paid beyond a limit of 12%, then excess will be disallowed. So can you tell me how much excess? Yes, 36,000 is calculated by applying 24%. Up to 12% deduction is allowed. So beyond 12%, how much extra is paid? 12% extra is paid. So how much should be disallowed? Yes. Out of 36, 18,000 should be disallowed. 18,000 should be disallowed. So let me put the plus sign here. Let me put the plus sign, and along with that, let me write the amount of 18,000. So I have put it the plus sign here. Along with that, I have written the amount of 18,000 which will be disallowed. Salary to working partner A. This entire salary will be added back. Then it says salary to non-working partner B. This salary will also be added back. And salary to non-working partner, that will not be allowed as reduction. That will not be allowed as reduction. So once you have computed the book profit, thereafter you have to compute the maximum limit for remuneration. Once you arrive at the amount of maximum limit, your actual remuneration and maximum limit will be compared. Out of these two, whichever is lower will be allowed 2 years deduction. But while you compare the maximum limit with actual remuneration, in that actual remuneration, you should not take salary paid to non-working partner, because salary paid to non-working partner is not eligible for deduction. Ideally, you should not pay any salary to non-working partner, because salary is a reward for rendering the services. Since he has not worked, he has not rendered any services, there was no point in paying him remuneration. But even though you are paid, we are not going to give you any deduction. So this will be added back, and then while calculating deduction, this will not be taken into account. Have you understood this? Yes or no? Okay, let's proceed further. Next point says interest on capital of A at the rate of 20% per annum, and the amount of interest is 30,000. Interest on capital is allowed as deduction to what extent? It is allowed as deduction to the extent of 12% per annum. It is allowed as deduction to the extent of 12% per annum. You are paid at what rate? 20%. So what is excess? 8%. So how do you ascertain the amount of excess? 30,000 divided by 20 multiply by 8. 30,000 divided by 20 multiply by 8. How much you are getting? 30,000 divided by 20 multiply by 8. Yes? 12,000. So out of 30,000, 12,000 will be disallowed. So I am putting the plus sign on the left hand side, and I am writing 12,000. This 12,000 will be disallowed. Similarly, interest on capital of B at the rate of 20% per annum, 10,000. Out of 10,000, how much will be disallowed? Yes? 4,000 will be disallowed. So put the plus sign, write 4,000. Put the plus sign, write 4,000. Provision for bad and doubtful debts. Provision for bad and doubtful debts is not allowed as deduction. Deduction is allowed only for actual bad debts. This provision for bad and doubtful debts is nothing but RDD. For RDD, you can't claim deduction. Next is entertainment expenditure. It is related to employee welfare. It is allowed as deduction. Depreciation machinery. See, just below the question, there is additional information. If you refer to the additional information, examiner has not given you any information for calculating depreciation as per the Income Tax Act. For calculating depreciation, you should be having opening WDV, purchase, sale, etc. That information is not given. Since that information is not given, we would take an assumption that the accounting depreciation and income tax depreciation are same. If the information with respect to calculation of depreciation is not given in the question, then we would safely presume that accounting depreciation, income tax depreciation both are same. You add the accounting depreciation, you deduct the income tax depreciation, and since the amount is same, there is no point in adding the same amount and then deducting the same amount. In that case, this depreciation should be totally ignored. This depreciation should be totally ignored, considering that this amount of depreciation which is debited to profit and loss account is calculated as per income tax only. Have you understood this? Next point is donation to Prime Minister National Relief Fund. See, donation to Prime Minister National Relief Fund is allowed as deduction in Section 80G. Section 80G is part of that Section 80C to 80U, which is Chapter 6 deduction. Right now we are calculating PGBP income. So while we calculate PGBP income, we don't have any section to give deduction with respect to donation to Prime Minister National Relief Fund. So this will be totally disallowed. This will be disallowed right now. While calculating PGBP income, it will be deducted in the Chapter 6 deductions. So I am adding here. Let's move on to the credit side. Sales is an income relating to business, that should be ignored. Interest on investment will be taxable under IFRS. Long-term gain, short-term gain will be taxable under capital gain. All these are related to other heads, so I am deducting here. Winning from lottery is also related to other heads, so I am deducting it. So all these four amounts are deducted. First one is sales, part of PGP income, so that is ignored. Let's move on to the last two small adjustments. Yes, shall I proceed to adjustment? Credit side is very simple. These are the incomes belonging to other heads. Therefore, they are deducted here, but our objective is to calculate the PGP income. Additional information, point number A. Cost of goods sold includes 2 lakh rupees. Cost of goods sold includes 2 lakh rupees. What is this 2 lakhs? Purchase of goods from a proprietary concern of A's wife. The market value of this goods is 1,75,000. So, Mr. A is a partner in the firm. The partnership firm has purchased goods worth 1 lakh, purchased goods having a fair market value of 175 at the value of 2 lakh from the sole proprietary concern of A's wife. In that case, we can apply the provision of section 40 capital A subsection 2. We can apply the provision of section 40 capital A subsection 2 and 25,000 should be added back. So, where this is included in cost of goods sold. So, you can go up, here you can put the plus sign in the cost of goods sold. How much should be disallowed, how much should be added back is 25,000. You can put the plus sign, write 25,000 and write adjustment number A. Adjustment A. Now let's move on to point B. This is very important. Read it very carefully. During the year, the firm received interest of 1,200 from Mr. P, a debtor. So firm has received an interest of 1,200 from a debtor. Debtor means a customer. So maybe you might have granted some credit period to customer on the credit sales and he did not pay you money on time. Therefore, you have charged him interest. Whatever interest you have received from your customer, that would be considered as income incidental to business. That would be considered as income incidental to business and that would be taxable under that PGBP only. So what it says, during the year, firm received an interest of 1,200 from Mr. P, a debtor, for a delayed payment and is not accounted in the books. Not accounted in the books means entry is not passed in the books of accounts. Entry is not passed in the books of accounts. So this is nothing but income taxable under the head PGBP but not credited to profit and loss account. So this should be added. This amount should be added. Yes. How would you treat the various incomes received by the partners from the firm? Also compute the business income of the firm. Now first of all, pick up the calculator, start the solution with net profit as per profit and loss account which is 80,000 rupees. Add all those items which are related to addition adjustment and subtract all those items which are related to subtraction adjustments. Yes, lot of people have given me answer 4,13,200. 4,13,200. What is this 4,13,200? This 4,13,200 is income from business profession before claiming deduction for remuneration. In simple language, we can say this is nothing but book profit. This is not income from business profession, this is book profit. You can say that yes, this is the income from business profession before claiming deduction with respect to remuneration. So this is book profit. Can you tell me, can you get me the amount of maximum deduction with respect to remuneration? Do you remember just few minutes back, I had explained you section 40B. In that, for payment of remuneration, limit was calculated based on book profit. I took an example wherein I gave you the amount of book profit as 4,13,200. Do you recollect that? I had taken the example of 4,13,200 as book profit. See here, 413,200. So based on this 413,200, if you ascertain the maximum limit for remuneration payment, that would be 337,920. That would be 337,920. Yes or no? Now tell me what is the actual remuneration paid to the working partner? Look at the debit side of profit and loss account. Find out what remuneration is paid to the working partner. Commission to working partner is 30,000. Salary to working partner is 2 lakhs. Salary to non-working partner B, 48,000 should be totally ignored. Because whatever is paid to non-working partner cannot be claimed as deduction. So tell me what is the actual remuneration? What is the actual remuneration? 30,000 plus 2 lakh, that is 2 lakh 30. And what is the maximum limit for payment of remuneration? 337,920. So how much should be allowed as deduction? 2 lakh 30 should be allowed as deduction. 337,920 or 2 lakh 30,000, whichever is lower. 337,920 or 2 lakh 30,000, whichever is lower, should be allowed as deduction. It should be allowed as deduction. So you deduct the amount of 2 lakh 30, deduct the amount of 2 lakh 30 from a book profit. Your book profit was 4 lakh 13,200. Your book profit was 4 lakh 13,200. From that, you deduct the amount of 2 lakh 30 as deduction for remuneration paid by the firm to the partner. Get me what is the income from business profession of the firm? What is the amount of income from business profession? $183,200. 183,200. What about others? What about others? Are you all getting 183,200? Okay. So now see this. Look at this. Statement of computation of book profit of the firm. So I have a solution of question number 17 in front of you. Net profit as per profit and loss account is 80,000 rupees. You have added certain adjustments. You have deducted certain adjustments and you have ascertained the amount of book profit. Book profit is 4 lakh 13,200. Based on this 4 lakh 13,200, you have ascertained the maximum remuneration limit, that is 337,920. 337,920. Now you calculate your PGBP income. Your book profit is 413,200 and your deduction for remuneration will be actual remuneration 230 or maximum limit 337,920, whichever is lower. So what will be allowed to as deduction is 230. So what is your income from business profession? 183,200. 183,200 is the income from business profession. Have you understood this much? Yes. Now listen to me very carefully. I am going to explain you one point. Before we move on to remaining part of the solution, I am going to explain you one point. Say for example, this is the profit and loss account of the firm. This is the profit and loss account of the firm. Interest on capital. Let me give the example from the same question. I will take the example from the same question. Here, interest on capital of A at the rate of 20% is 30,000. Interest on capital of Mr. A at the rate of 20%. What is the amount? 30,000. So this is the amount. Why you are writing 40A9? 40A9 is what? Employer's contribution to statutory, employer's contribution to any unrecognized fund will be disallowed. Employer's contribution to any unrecognized fund will be disallowed. Read me what you are writing this. Listen to me very carefully. By mistake. Okay. Now, can you see? Profit and loss account debit side, in your question, profit and loss account debit side, Interest on capital of A is 30,000 rupees and that is calculated at the rate of 20%. So what you have decided? How much is excess out of this? Interest on capital is allowed as reduction na, at 12% per annum. So you get the amount of excess interest. Interest is paid at 20%. Deduction is allowed at 12%. So extra 8% is paid. So 30,000 divided by 20 multiplied by 8. 30,000 divided by 20 multiplied by 8. This will give you an amount of 12,000 rupees. Yes or no? $30,000 divided by 20 multiplied by 12. This will give you an amount of 18,000 rupees. Correct? What is going to happen for this 12,000 and what is going to happen about this 18,000? So 12,000 interest which is paid, 12,000 interest, what will happen? Deduction will be allowed or deduction will be disallowed to the firm? 12,000, what is going to happen? 12,000 not allowed. So if deduction is not allowed to the firm, deduction is not allowed. What is the consequence? Firm's PGBP income will increase. Firm's total income will also increase. In other words, on this amount, firm will pay the tax. Tax liability will increase. So can I say on this 12,000, since this is disallowed to the firm, firm's income has increased, firm's total income and tax liability is increased. So this 12,000 is taxable to firm. This 12,000 is taxable to firm. Yes or no? On this 12,000, firm will pay the tax because you are adding. Since on this firm has already paid the tax, this is not taxable to partner. This is not taxable to partner. Why na? If you levy the tax in the hands of partner as well as firm both, that would amount to double taxation. That would amount to double taxation. So we say that whatever is taxable to the firm will not be taxable in the hands of the partner. To avoid the double taxation, we are saying this. What is the consequence of this 18,000? To the firm, deduction is allowed for this 18,000. Deduction is allowed means what? Firm's PGBP income will be less na by 18,000. PGBP income is less, taxable income is less, tax liability is also less. Means what? Means this is not taxable to firm. While calculating income of the firm, this is not taxable to firm. If this is not taxable to firm, what will happen? It will become taxable to the partner. It will become taxable to the partner. Have you understood this? So whatever amount is disallowed to firm, on that firm has paid the tax, on that same amount partner is not going to pay the tax, otherwise it will amount to double taxation. Whatever amount is allowed as deduction to the firm, only on that amount partner will pay the tax. Yes, is that very clear? Yes or no? So, I am not wasting my time now in discussing. Say for example, I have this in front of me. Let me complete in 1 minute's time. This solution will be sent to you. At that point of time you revise. Right now let me complete in 1 minute's time. Taxable income of the partner. Taxable income of the partner. Working partner A, how much salary he received? 230. What is disallowed to firm is 0. So firm has paid tax on 0. So entire 230 is taxable in the hands of partner. Interest on capital received by partner A is 30,000. What is disallowed to firm? 12,000. I am repeating once again. Listen to me carefully. What is the remuneration received by the partner A? 2,30,000. Out of 2,30,000, what is disallowed to firm? Nothing is disallowed, na? Entire 230 was allowed to firm here. So nothing is being made taxable nothing is taxable in the hands of the firm. So entire amount of 230 will be taxable in the hands of partner. Interest on capital, partner A has received an interest of 30,000. Out of 30, how much is disallowed to the firm? 12,000 is disallowed to the firm. On the 12,000, firm has paid the tax. So on the 12,000, partner will not pay the tax. Partner will pay tax only on balance 18,000. So in all, partner A will pay tax on 2,48,000. In all, partner A will pay tax on 2,48,000. Is that very clear? Yes. Let's move on to partner B's calculation. He has received a salary 48,000. Partner B is a non-working partner. He has received a remuneration of 48, and you know that any remuneration paid to the non-working partner is disallowed to the firm, and is disallowed to the firm. Since it is disallowed to the firm might have paid the tax on that 48,000. So that 48,000 is not taxable in the hands of partner. So entire 48 I am deducting as amount disallowed to the firm. So nothing is taxable with respect to remuneration in the hands of partner B, who is a non-working partner. Interest on loan is 36,000. This is at the rate of 24%. Out of that, how much is disallowed to the firm? 18 is disallowed to the firm. 18 is disallowed to the firm. So we are deducting 18, and balance 18 is taxable to the partner. Interest on capital, out of 10,000, 4 is disallowed to the firm. So on 4, firm has already paid the tax. Partner will not pay tax on this 4. So partner will pay tax only on 6. So what will be taxed in the hands of partner B, non-working partner? 24,000. 24,000. Have you understood this? Whatever is taxable in the hands of the firm cannot be taxed in the hands of partner. Whatever is not taxed in the hands of the firm will be taxed in the hands of the partner, to avoid the situation of double taxation. Now, before we have a break, I'll tell you only one sentence. Section 10, clause 2A. We had a discussion with respect to salary, bonus, commission, remuneration, etc. We had a discussion with respect to salary, bonus, commission, remuneration, interest, etc. But there is one more point, share of profit. There is one more point, share of profit. Whatever there is a profit on, whatever profit firm has earned out of business, now, on that profit, firm is going to pay the tax. Firm will pay the tax. Thereafter, whatever profit is left, profit after tax, will be apportioned to the partners. Do you believe that partner will have to once again pay the tax on the amount of profit? On profit, firm has already paid the tax. On that same profit, if you levy tax once again in the hands of partner, that would amount to double taxation. Therefore, in Income Tax Act, we have one section, section 10, clause 2A. Section 10, clause 2A, which says that share of profit from the firm will be exempt in the hands of partner. Share of profit from the firm which is received by partner will be exempt in the hands of partner. Why it is exempt in the hands of the partner? Because firm has already paid tax on that amount. Firm has already paid tax on that amount. Is that very clear? Yes? Is that very clear? So we have completed our discussion with respect to question 17. Now we are left with question number 18. So we'll have a break. We'll have a break. Right now it is 11:39 in my watch. 11:40. You consider it to be 11:40. So let's move on to the last question. That is question number 18. Question number 18. This is the last question which we will be discussing in this chapter. Dr. J.L. Gupta is a renowned medical practitioner who maintains books of accounts on cash basis. So it is clearly written that he is maintaining books of accounts on cash basis. And at the same time, receipt and payment account is given to us in the question. So we should calculate his income based on cash system of accounting. Following is the receipt and payment account. See, this is the only question, this is the first and the last question which you are solving with respect to cash system accounting. Generally, teachers do not take up even single question. I am taking one question because you cannot rely upon the CA Institute. They can ask any question at any point of time. Let us begin the analysis of the receipt side. Balance brought forward is an opening balance that should be totally ignored. Because this is the closing balance of last year, and closing balance of last year might have been calculated as receipts of last year minus payments of last year. Receipts of last year might have been taken into account while computing income of last year. Payments of last year might have been taken into account while computing income of the last year. They might have been deducted, considering them as expenses. So basically opening balance is nothing but the amount pertaining to the last year, that should be totally ignored. Consultation fees pertaining to the year 1920 and pertaining to the year 2021. Which one should be taxed? Yes? Which one should be taxed? Both should be taxed, both. Mr. Deva, both should be taxed. Why? Because SSC is following cash system, na? He is following cash system accounting. So income is taxable on receipt basis. So in the current year, what is received? 5,000 is received pertaining to the year 1920, and 1,35,000 is received pertaining to the year 2021. So entire 140 should be taxed. Have you all understood? So left hand side here, you can write BI. BI. BI means business income. Visiting fees 30,000. So doctor might have visited the house of a patient and he might have got the visiting fees. So that is also business income. Loan from bank for purchase of car 125. This is not an income, this is a liability. This is a liability, therefore this cannot be taxed. Correct? Next, sale of medicines. Sale of medicine is a business income, BI. Sale of medicine is a business income. Gift and present. Gifts and present. I do not know this gift is received from whom. If this gift is received from client, then it will be taxed under that PGBP. If this gift is received from any other person, then taxability will be discussed in the chapter of income from other sources. So for the time being, I can take an assumption that yes, this gift is received from client, therefore it will be taxed under that PGBP. So I am taking an assumption that this gift is taxable under that PGBP, it should be considered as a business income. Royalty for articles published in various journals. So you might have published articles in various journals. For that article is published, you have received the royalty. You have received the royalty. This is taxable under income from other sources. This is taxable under income from other sources. Dividend is also taxable under income from other sources. Interest on government securities is also taxable under income from other sources. So receipt side we have done the analysis. Now let's move on to the payment side. Rent of clinic. You can claim deduction of rent for the year 1920 as well as 2021 because deduction is allowed on payment basis and the payment is made for both the rent. So against 1200 you can write BE business expense. Against 24,800 also you can write BE business expense. Water and electricity BE business expense. Purchase of professional books. See, purchase of professional books, it is a capital expenditure. Purchase of professional book is a capital expenditure. And you know that capital expenditure deduction is not allowed. Deduction is not allowed, but you can calculate depreciation. You can capitalize this and you can claim depreciation at the rate of 40%. If you recollect the rate of depreciation for books, it is 40%. Household expense, deduction is not allowed because it is a personal expenditure. Household expense, you can't claim deduction because it is a personal expenditure. Next is motor car purchased. Motor car purchased is a capital expenditure. So deduction cannot be claimed. So against this motor car you can write CE capital expenditure. Deduction is not allowed. But on this motor car definitely you can claim depreciation deduction. You can claim depreciation deduction. Next is surgical equipments purchased. Next is surgical equipment purchased. Surgical equipment purchased, that is also a capital expenditure. So you can write CE. For this you can't claim deduction, but definitely yes, you can claim depreciation deduction. You can claim depreciation deduction. Income tax is an appropriation of profit. For this deduction is not allowed. Salary to staff. Salary to staff. It's a business expenditure. Deduction is allowed. Life insurance premium is a personal expenditure. This is a personal expenditure. Deduction is not allowed. But if the examiner is asking you to calculate the total income, then you can claim deduction for this life insurance premium paid in section 80C. Gift to son is a personal expenditure. Gift to son is a personal expenditure. Deduction is not allowed. Interest on loan. What is this interest on loan for? Yes. Interest on loan. Loan was for what? Loan was for purchase of car. Loan was taken for purchase of car. So, if the car is used for business purpose or profession purpose, then this interest is allowed as deduction. For the time being, I am assuming that this car is used 100% of the time for professional purpose. So, deduction is allowed for this interest. Car expenses, once again, car expenses will definitely include what? Fuel cost, etc. Purchase of medicine, that should also be considered as a business expense. Closing balance should be totally ignored. Closing balance is a cumulative effect of all the receipts minus all the payments. That should be totally ignored. You know that While the SSC is following cash system accounting, we would be calculating his income from profession by direct method. So what we'll be doing from the receipt side, we'll be picking up business incomes. From the payment side, we'll be picking up business expenses. From business incomes, I would deduct the amount of business expenses, and the balance amount will be income from profession. But before that, let us go through the adjustments. There are 7 adjustments here. Here they are saying that compute his income from profession. See, examiner is asking you to compute the income from profession. So this life insurance premium, this cannot be claimed as deduction. This can be claimed as deduction in section 80C while you compute your total income, but right now they are asking you to calculate income from profession. So this life insurance premium you cannot claim deduction. At the end of the solution, you can write a note saying that life insurance premium paid can be claimed as deduction in section 80C while computing total income. Point number 1 says books worth 25,000 were purchased on 15th May and balance were purchased on 5th February. Yes. Can you tell me what is the book value of books purchased? 40,000. Your books purchased are worth 40,000. Sir, here you can write adjustment number 1 in the bracket. Yes. Why this information is relevant? On books you have to calculate depreciation. And since some of the books are purchased on 5th February 21, can you tell me what is the balance amount? You have purchased books worth 40,000, out of which books worth 25,000. Books worth 25,000 were purchased on 15 February. So what is the balance? Balance is 15,000. So on 25,000 you calculate depreciation by applying full rule. On 15,000 you calculate depreciation applying half rule. Half rule. So point number 1 is over. Car was purchased on 1st July 20, means we will apply full rule. Surgical equipments were purchased on 4th September 20, means we will apply full rule while calculating depreciation. So wherever you have written surgical equipment purchase, motor car purchase, you can write adjustment number 2 here. So point 2 is over. Point 3, it is estimated that 1/3 of the time car was used for personal purpose. 1/3 of the time car was used for personal purpose. See, I'll explain a very important point here. Listen to me very carefully. One-third of the time car is used for which purpose? Personal purpose. Means 2/3 of the time car is used for business or profession purpose. Now what should happen is, for this deduction is allowed. For this deduction is allowed. For this one deduction is not allowed, correct? The extent to which car is used for business purpose, profession purpose, deduction will be allowed. The extent to which car is used for personal purpose, deduction will not be allowed. Now what effect should be given now? If SSC is following mercantile system, if SSC is following mercantile system, then you might have debited the entire expenditure relating to car in your profit and loss account, and your solution will start with net profit as per profit and loss account. While calculating net profit, you might have debited the entire amount to profit and loss account. Means while calculating net profit, the entire amount of car expenses etc. is deducted. So what we will do here? We will add back 1/3 amount. 1/3, which is a personal expense, will be added back. But if SSC is following cash system accounting, In that case, we don't start the solution with closing balance in the receipt and payment account. Therefore, if SS is following cash system, this portion which is two-third, this is business or profession purpose. This is allowed as deduction. So this should be deducted. This should be deducted. Have you understood the difference in treatment? Have you understood difference in treatment? How the treatment will be given if SS is following mercantile system? How the treatment will be given if SS is following cash system? Yes, have you understood this? Yes or no? Yes. So the question which we were solving, in that question, it says that it is estimated that 1/3 of the time car is used for personal purpose. And this is the question of receipt and payment account. SS is following cash system accounting. So tell me what we are going to do in the solution. We will claim deduction up to the extent to which the car is used for business purpose or professional purpose. That would be considered as an expenditure, deduction will be allowed, it should be deducted. Yes or no? 1/3 is personal, that should be ignored. 2/3 should be deducted. 2/3 should be deducted. This adjustment is applicable. 0.3 adjustment is applicable here in car expense also, interest on loan also, and depreciation also. So adjustment number 3 is applicable for 3 points. Number 1, interest on loan. Number 2, car expenses. And number 3, depreciation on car. With this, adjustment 3 is over. Adjustment 4, it says gift and present include 2,000 gift receipt from patient in appreciation of medical services. So this 2,000 gift is related to profession. And 3,000 is received as birthday gifts. Birthday gifts, there is no treatment in PGBP chapter. It is not taxable here under the head income from business profession. Whether it is taxable under income from other sources, yes, it can be taxed under income from other sources, but there are a lot of conditions. The amount should exceed 50,000. It should be covered by the definition of term property, etc., etc., etc. You might not understand right now, but right now, whatever is appearing on the receipt side as gift and present, out of that, what is going to become taxed is only 2,000, which is received from patient. So here I am writing adjustment number 4. Now we move on to the last point. Opening stock and closing stock of medicines amounted to 10,000 and 6,000 respectively. See, in accountancy you might have learned that what is an expenditure? Cost of goods sold is an expenditure. Opening stock and closing stock is not an expenditure. Opening stock is not an expenditure, closing stock is not an income. What is an expenditure is cost of goods sold. But how did you calculate the amount of cost of goods sold? How do you calculate? You take the opening stock, to that you add the purchases, from that you deduct the closing stock, and the amount of cost of goods sold is arrived. So you have two options. Option 1, write the cost of goods sold on the debit side of your profit and loss account. Or instead, if you don't want to write the cost of goods sold, then you can write opening stock and purchases on the debit side, and you can write the closing stock on the credit side. Ultimately, the effect is same. The only thing is there is a change in the presentation. So in trading account, if you write opening stock and purchases on the debit side, and you write closing stock on the credit side, net to net you are writing cost of goods sold only. So the other way to present this in your trading account is to just write the cost of goods sold on the debit side, How will you ascertain this cost of goods sold? You will take up the opening stock, to that you will add the purchases, from that you will deduct the closing stock to arrive at the amount of cost of goods sold. So here we should not give deduction to the SSE for the opening stock and closing stock. We should give him deduction for cost of goods sold. So you have the details of opening stock, you have the details of closing stock, you have the details of medicines purchased here, 40,000 rupees. You have the details of sale of medicine, 60,000 rupees. So you have all the amounts. You have all the amounts. So you take the opening stock of medicine, to that you add purchase of medicine, take the total, from that you deduct closing stock of medicine. You will arrive at the amount of cost of goods sold. This cost of goods sold should be considered as part of expenditure and deduction should be allowed. And sale of medicine should be considered as part of income and it should be taxable. Yes, have you understood this? So adjustment number 5, I will write here purchase of medicine. I will ascertain what? I will ascertain cost of goods sold. So can you help me to ascertain the amount of cost of goods sold? What is the opening stock? 10,000. What is the purchases? 40,000. So I should add this 40,000. What is the closing stock? 6,000. So what is the amount of cost of goods sold? 44,000. This deduction is allowed for 44. So you can't claim deduction for purchase of medicine. Instead of that, you will be claiming deduction for cost of goods sold. Yes, is that very, very clear? Yes. Now let us calculate the income. Pick up your calculators. On the receipt side, you take all the incomes. Consultation fees pertaining to the year 1920, 5,000, pertaining to the year 2021, 135. So 5,000 plus 135 is 140, plus you take the visiting fees 30,000, 140 plus 30 is 170. Sale of medicines 60,000, 170 plus 60 is 230. Gift and present included only. Oh, don't worry about that. I'll cover those adjustments. Right now I forgot to cover. I'll cover, don't worry. I did not look at the next page. Okay. Before we calculate, let us cover. Can you tell me what is this outstanding consultation fees? Outstanding consultation fees. Consultation fees is your income. So this outstanding consultation fees is income receivable. And point number 7 is outstanding rent. Rent is your expense. So the outstanding rent is your rent payable liability. Now my question to you is, here SSC is following cash system accounting. So income is taxable on which basis? Is it taxable on accrual basis or is it taxable on receipt basis? Definitely it is taxable on receipt basis. Similarly, since SSC is following cash system accounting, question arises whether the deduction is allowed for expenditure on which basis? Deduction for the expenditure will be allowed on accrual basis or deduction for expenditure will be allowed on payment basis? Definitely deduction for the expenditure will be allowed on payment basis. So what is the consequence now? This outstanding expense, prepaid expense, income receivable, income received in advance, all these 4 types of adjustment now. Outstanding expense, prepaid expense, income receivable, income received in advance. These 4 types of adjustments are not done when SSC is following when SSC is following cash system accounting. These 4 type of adjustments are done only when SSC is following mercantile system accounting, but right now SSC is following cash system accounting, so this transaction will not be given effect to. These are not relevant. Have you understood? This will not have any effect on your solution. Yes, shall we proceed? Let us try to calculate the income. Do you want me to give you 2-3 minutes? Or shall I start the calculation? In case of mercantile system, what will be the effect? In case of mercantile system, this will not be given in the adjustment. This would have been debited and credited to the profit and loss account. In case of mercantile system, this outstanding consultation fees would be credited to profit and loss account and outstanding rent would be debited to profit and loss account. And if at all it is not debited, credited, then in case of mercantile system, this outstanding consultation fees will be added to income because it is taxable. It will be added to net profit and this outstanding rent would be deducted. Now let's move on to calculate the income from business profession. You take the income from the income side, business income, consultation fees 5,000 plus consultation fees 135 plus visiting fees 30. So 135 plus 5 is 140 plus 30 is 170. Sale of medicine 60, 170 plus 60 is 230. Out of gift, how much is related to profession? 2,000. So you take 2,000. So what is the total of the income? Format of the solution is very simple. Particulars amount. One after another you go on writing income in the inner column. Take the total, put it in the outer column. What will be the total? 2,32,000. Yes or no? 2,32,000 should be the total of the income. $2,32,000 should be the total of the income. See this. This solution I will appropriately change and send it to you. But this is consultation fees. 5,000, 135, 140, visiting fees 30, sale of medicine 60, gift and present from patient 2,000, total 232. This solution now, instead of 1819, this should appear as 1920. This is 1920 and this is 2021. So total of income is 232. Now let's try to deduct the expenses. What will deduct in expenses? Rent of clinic 1,200, rent of clinic 24,800, water and electricity 2,100, professional books will claim depreciation. We have adjustment number 1. Let us take up adjustments later on. So ignore professional books as of now. Next, household expense, motor car purchase, surgical equipment purchase, income tax. All these are either capital expenditure, not allowed as deduction, or personal expenditure. The next point to be deducted is what? Next, business expense, where you have written BE against salary to staff. So salary to staff 15,000 should be deducted. Thereafter you have interest on loan, car expenses. Tell me what is interest on loan? 11,000. The related adjustment is adjustment number 3. 1/3 of the time car is used for personal purpose. 1/3 of the time car is used for personal purpose means 2/3 of the time it is used for business purpose. 2/3 should be deducted. So you take 2/3 of 11,000, you will get 7,333. You will get 7,333. For that 7,333 deduction will be allowed. Then you have car expenses 15,000. You have car expenses 15,000. Of that also 2/3 will be allowed as deduction. So you take 2/3. 2/3 of car expenses how much? 10,000. That will be allowed as deduction. So that should be deducted. That should be deducted. Instead of purchase of medicine, you are going to get deduction for what? Cost of goods sold. What is the amount of cost of goods sold in adjustment number 5? 44,000. 44,000. This 44,000 should also be deducted. Hopefully you are doing the calculation on the calculator. Now friends, let us calculate the depreciation now. Let us calculate the depreciation. Mr. Gaurav, car is used 1/3 of the time for personal purpose, na? Car is used 1/3 of the time for personal purpose means to what extent it is used for business or profession purpose? To what extent it is used for business or profession purpose? 2/3 of the time. 2/3 of the time. So if SSC is following cash system accounting, we will follow direct method for computation of income. When you follow direct method, you deduct the 2/3 amount. When you follow direct method, you deduct the 2/3 amount. See, 1/3 of the time car is used for personal purpose, 2/3 of the time car is used for business profession purpose. Personal purpose deduction is not allowed. Profession purpose, business purpose deduction is allowed. In case of mercantile system accounting, the starting point of our solution is net profit as per profit and loss account. How do we calculate the net profit? All the car expenses etc. which would appear on the debit side of profit and loss account might have been already deducted na, while for the purpose of calculation of net profit. So, net profit is having a minus effect of the entire amount. So, your business profession purpose 2/3 is allowed as deduction and it is already deducted. Therefore, that 2/3 amount should be ignored. 1/3 is disallowed. So, 1/3 should be added. 1/3 should be added. This approach will be followed when the SSC is following mercantile system accounting. Gaurav, have you understood? Yes or no? Okay. If SSC is following cash system accounting, then what? Then we follow the direct approach, na? In direct approach, we pick up the incomes from the receipt side. We pick up the expenses from the payment side. So, payment side you will have the entire amount of expenditure. But we are going to get deduction only to the extent it is used for business purpose, professional purpose. How much is used for business, professional purpose? 2/3. So, whatever expenditure you see, of that you take 2/3 and that 2/3 you should deduct. Yes, have you understood? Now, let us calculate depreciation on the books. Let us calculate depreciation on the books. What is the value of books purchased? 40,000. Will be broken down into two parts, half rule and full rule. Value of book purchased 40,000. This is divided in two parts. Which are those two parts? 25 and 15. 25,000, 15,000. Books worth 25,000 are purchased on which date? 15th May 20 and 5th February 21. May 20 and 5th February 21. Mr. Redmi, which type of question you are asking? Definitely it is necessary to find depreciation here. Depreciation deduction will be allowed na, in section 32. If deduction is allowed, definitely you should calculate and claim deduction. Irrespective of whether the assessee is following mercantile system accounting or whether he is following cash system accounting. In both cases, depreciation calculation is going to remain the same. So definitely depreciation should be claimed as deduction. Yes, tell me what is the rate of depreciation? In case of books, 40%. So 25,000 to 40% is 10,000. Then here 15,000 to 40% into 1 by 2. Give me the amount. 3,000. So total depreciation is 10 plus 3, 13,000. This is depreciation on book. We are following direct approach. So this 13,000 should be deducted. Is that very clear? All of you? Yes or no? So deduct this 13,000. Deduct this 13,000. Now, related to car also there are certain adjustments. Relating to car there are 3 adjustments: interest on loan, car expense and depreciation. Interest on loan, how much deduction will be allowed? 2/3. So 2/3 of 11,000 is how much? 7,333. And car expense, 2/3 of 15,000 is 10,000. You also calculate depreciation on car. What is the value of motor car purchased? 1,30,000. On that 1,30,000 you calculate depreciation. What rate? What is the rate of depreciation on car? Normal depreciation 15%. If the car is used in the business of running the one hire, 30%. If the car is acquired between 23rd August 2019 to 31st March 20, then the existing rate will increase by 15%. So 15 will become 30, 30 will become 45. So we will be just taking 15%. So 1,30,000 is the value of car. On car we are calculating depreciation. 1,30,000 is the value of car. Multiply by on car you have to apply full rule, na? Car you have to apply full rule into 15%. The car was purchased on 1st July 20, so you have to apply full rule. So 1,30,000 into 15% into 2/3 time it is used for business profession purpose. So 1,30,000 into 15% will give you 19,500. You take 2/3 of that 19,500 will be 13,000. For this deduction will be allowed. This should be deducted minus. Yes, is that very clear? Yes, any one of you can give me the amount of income from business profession? If you are writing simultaneously in your notebook in rough calculation, can you give me the amount of income from business profession? One lakh 1,567. Bhaskar says 1,01,567. Vidya Shri says 97,847. 97,847 is the correct answer. Let us see. I will show you the solution. I am deducting rent of the clinic 1200, 1224 800, that is 26,000. Water and electricity 2000, salary to staff 15,000, interest on loan for purchase of computer 7,333, car expense 10,000, cost of medicine sold. This is nothing but COGS. Cost of goods sold means cost of medicine sold 44,000. Depreciation on book we calculated na. What is depreciation on book? 13,000. Depreciation on car, that is also 13. So depreciation books 13,000, depreciation on car 13,000. Now we are left with depreciation on surgical equipments. What is the value of surgical equipments? 24,800. 24,800. And this were purchased on 4th September. 15% is the rate of depreciation. So 2400 into 15%, 3720. 3720. Take the total of expense to the outer column. Just check it whether you are getting this amount or not. 134,053. And taxable PGBP income should be 97,947. 97,947. Is that very, very clear? Yes? So with this our PGBP chapter is over. Few questions, already solution is provided to you in the book itself. Certain question solution is not provided. Wherever the solution is not provided, it will be provided. I will provide you for that. Water bill we have deducted na? What is this? Water bill is 2,100. Let me check then. Water bill is 2,100. Okay, okay. So it is mistake here. It should not be 2,000. It should be 2,100. If you deduct 2,100, are you getting 97,947? Yes. If you deduct 2,100 as water bill, are you getting an amount of 97,947? Sorry, 847. So this is not the correct amount then. 97,847 is the correct amount. 94,847 is the correct amount. Yes, is that very clear? See, now I am having the option to go to the chapter of salary or go to the chapter of agriculture income. But I will not go to the chapter of salary, I will go to the chapter of agriculture income, because in the ICI module you have the combined questions. In the chapter of PGBP itself, agriculture income concept is combined. So today I will start with agriculture income, we will wind up this chapter of agriculture income, and then we will start with income from salary tomorrow. We will start with income from salary tomorrow. So we are starting with agriculture income. This chapter is not going to take more than 2 hours time. In fact, books will not have this as a separate chapter. I have inserted this as a separate chapter in our book. Otherwise, this is part of a chapter called as income exempt from tax in ICAI module. Here I have inserted this as a separate chapter. So today we will try to complete this chapter. Every small chapter, how many pages see? That's all, 4 pages, 4-5 pages, very small chapter. Agriculture income. Agriculture income is exempt or it is taxable? Agriculture income is totally exempt from tax. Agriculture income is totally exempt from tax. So the question arises, what do you mean by agriculture income? Question arises, what do you mean by agriculture income? So that is what we need to understand. Section 10 clause 1. Section 10 clause 1 says agriculture income is exempt from tax provided it is earned from a agricultural land situated in India. You have done some agricultural activities on agricultural land situated in India, then agriculture income earned is exempt from tax. But if you have earned agriculture income from agricultural land situated outside India, then that agriculture income is totally taxable. Taxable definitely if it is within the scope of your income. If you are an ordinary resident person, then global income is taxable to you as per section 5. And in that case, if you are owning agricultural land outside India and you are earning agriculture income, then that agriculture income will be totally taxable. So agriculture income is exempt from tax provided the agricultural land on which you have done the agriculture activities and earned the income, that agricultural land should be situated in India. Now the question is, what do you mean by agriculture income? Just by saying that agriculture income is exempt from tax, this is not going to work. Why? Because everyone would claim that my income is also agriculture income. For example, I have the machines. I am purchasing wheat from farmer. I am grinding that wheat. I am making a wheat flour. I am packing wheat flour. And that wheat flour is sold in the market in 5 kg pack. So I am earning profit by selling the wheat flour. Is it an agriculture income? You may feel it is an agriculture income. Processing, it is not income from agriculture activities. It is income from processing the agriculture produce. That way, if you try to connect anything, everything will be connected to land. For example, I am wearing a shirt. This shirt is made from a cloth. Cloth is made from a thread. Thread is made from a cotton. So we get cotton from agriculture. So everything will become an agriculture income in that case. So the most important point is, what is an agriculture income? Agriculture income is exempt from tax, that is certain. But what do you mean by agriculture income? There is a confusion with respect to what do you mean by agriculture income. Everyone would say that my income is agriculture income. Therefore, to remove this confusion and provide more clarity, government had to define agriculture income. So in the Income Tax Act, we have a section of definition in which agriculture income is defined. And that is section 2, clause 1A, subclause A, subclause B and subclause C. In section 2, we have clause 1A, subclause A, subclause B and subclause C, wherein we are defining the agriculture income. So firstly, agriculture income is exempt from tax, that is certain. Here I told you 2 sentences. Agricultural income is exempt from tax provided it is earned from agricultural land situated in India. If you have earned an agriculture income from agricultural land situated outside India, then it is not exempt, then it is fully taxable. Number 2, question arises, if agriculture income is exempt from tax, question arises, what do you mean by agriculture income? Because every person will say that my income is also agriculture income, give me exemption. So government says no, we are defining what is agriculture income. So they have given a definition, section 2 clause 1a, subclause A, subclause B, subclause C. They have given the definition of agriculture income. First of all, I would try to explain you what is agriculture income. Agricultural income, your income can be called as an agriculture income provided you are doing two activities. Number one, primary activity. Primary activity. There are basically two activities. Number one, primary activities, and number two, secondary activities. Now the question arises, what do you mean by primary activities? What do you mean by secondary activities? See, primary activities means working on a land, basically putting human effort on a land. For example, tilling of land. With the help of plow, we till the land. That is called as tilling of land. Thereafter, we sow the seed. So, sowing of seeds. Then we do planting. Then we do watering. All these activities are part of primary activities. Thereafter, after few months, the produce will sprout out of the land. From the land, from the nature, from the earth, produce will sprout out. Once the agriculture produce has sprout out from the land, there is a harvesting season. And what you will do in the harvesting season? You will cut it. So that cutting, cleaning, all these are part of secondary activities. Once the produce has sprout out of the land, thereafter whatever activities you do will be called as secondary activities. Primary activities are also called as basic operations. Primary activities also called as basic operations. Secondary activities is also called as subsequent operations. This is also called as subsequent operations. Now we say that, first of all, have you understood primary activity and secondary activity? Have you understood what is primary activity, what is secondary activity? Yes or no? Deva? Oh, Mr. Deva. Have you understood primary activity, secondary activity, all of you? Yes, okay. So here in your notes, I am on which page? Page number 163. Important point to be noted. Point number 1, basic operations. Basic operations is nothing but what? Primary activity. Basic operations in relation to agriculture are those operations that involve expenditure of human skill and labor upon the land itself, and not on the growth from the land. Whatever produce you have got from the land, on that if you put the effort, that is not called as basic operations. Basic operations means you are putting effort on the land itself. For example, tilling of land. See, this farmer is doing tilling of land. Then sowing of seeds. So this second farmer is doing sowing of seeds. Then we have planting, watering, etc. All these are part of basic operations. Then once the harvesting season would arrive and produce has sprout out from the land, you will do cutting, polishing, grading, etc. All these things will be done. For example, potato grows inside the land. Potato grows inside the land. So to take out the potato, you have to do the digging. You have to do slight digging on the land. And when you get the potato, sand might be there on the potato, so you have to clean the potato. To the potato, some roots might be attached, na? So you have to cut those roots with the scissors. With the help of scissor, you have to cut the roots. Have you seen potato? Not the potato which you get from the market. Potato, when you take out from the land, if you are aware about the agriculture activities, potato is grown inside the land. So you have to dig slightly, you have to do digging. Then you have to take out the potato. On the potato, we have some small boils, na? Boils. That is nothing but to that boils, na? Root of a potato is attached. Potato roots will be attached. So you have to cut those roots with the help of scissor. All this is part of secondary activities. So here we say subsequent operations are performed after the produce sprouts from the land. Sprouts from the land means coming out of the land. When the produce is coming out of the land, we say that now we will start the subsequent operations. And subsequent operations would include number 1, weeding, number 2, digging the soil, number 3, removing undergrowths. Potato roots we cut na with the help of scissor, that is called as removing undergrowths. Pruning, cutting, harvesting, and rendering the produce fit to be taken to the market. And rendering the produce fit to be taken to the market. See, if you talk about wheat and rice, on that wheat and rice you have a brown cover, na? See, wheat when it sprouts from the land, it is not white in color. Inside, rice will not be white in color. On the rice there will be a brown cover, na? That brown cover is called as husk. Have you seen rice? Not normal white color rice, that rice, every rice is in the cover, na? That brown cover is called as what? Husk. I do not know whether you have seen this or not. So you have to remove the husk. So you will put the rice in the machine and machine will segregate the husk and it will segregate the rice. Husk will be sold off. Rice will be sent to polishing. Rice will be sent to polishing. Thereafter grading will be done based on the size of the 1 unit of rice, na? Grading will be done. Bigger size rice will be graded separately, smaller size will be graded separately, bigger size will be sold at a higher price, smaller size rice will be sold at a lower price. Such kind of grading will be done. So there will be a basic operation, there will be subsequent operations. Here we are saying that if you have performed basic operations, you have also performed subsequent operations, then your income which is earned is called as agriculture income, it is exempt from tax. Second possibility is you have performed the basic operations, but you have not performed the subsequent operations. In that case also whatever income you earn is called as agriculture income. Is called as agriculture income. You have not performed the primary activity, basic operations, you have performed the secondary activities and you have earned the income. Then your income will be called as non-agriculture income. Then your income will be called as non-agriculture income. If you have not performed any of these operations, then definitely income is non-agriculture income. See, first possibility you may not have any doubt. First possibility, na, you may not have any doubt. If you perform basic operations as well as subsequent operations, your income is agriculture income. Second possibility, you may feel that we are performing only basic operations. Why our income is considered as agriculture income? I will explain you. Say for example, I am a zamindar. I am having huge parcel of land. On my farmland, I have hired Manoj as an employee. So he will be working on my farmland every day for 8 hours. At the end of the month, I will pay him salary. At the end of every month, I will pay him salary. That salary, you may feel that it is a non-agriculture income, but Manoj has earned that salary by doing basic operations. Therefore, salary of Manoj would be considered as agricultural income. Salary of Manoj will be considered as agriculture income. Therefore, when a labor is working on a land, whatever income is earned by him, earned by the labor, would be considered as agricultural income. Say for example, on my farmland, I have hired 10 people to work. Out of 10, 5 are working on primary operations, 5 are working on secondary operations. Then people who have earned income from primary operations, their income would be considered as agriculture income. If you are earning only from secondary operations, then your income is non-agriculture income. Have you understood this? Yes or no? So if you earn income out of basic operations as well as subsequent operations, your income will be considered as agriculture income. If you earn income out of only basic operations without performing any subsequent operations, then also your income will be considered as agriculture income. So when your income will be considered as non-agriculture, you are not performing any basic operations, you are performing only subsequent operations, or you are not performing any of these operations. Third point, you may have some confusion. You are not performing basic operations, you are performing subsequent operation means what? Say for example, I am having a machine. I am a farmer. I am doing farming. On my farmland, I have hired 10 people. In the harvesting season, we will take out the rice and wheat. And that rice and wheat will put it in the machine. Machine will segregate the rice, wheat and husk. Husk will be segregated, rice and wheat will be segregated. Now this machine, in my village, if any farmer wants this machine, I will give this machine to that farmer on a rental basis by charging a rent of 2,000. Or what I will do is, I will ask the farmer to take the produce and come to me. I will put that produce in the machine. I will segregate the wheat and rice and I will segregate the husk. I am charging, say, 1 rupee per kilo to that farmer. For every 1 kg, I am charging 1 rupees for segregating the husk and segregating the rice. So I am earning income from what? I am earning income from only secondary activities. I have the machine. All the farmer in this particular village, they come to me. They take the produce and come to me. I segregate the husk and rice and I give it back to them. So I am earning income only from secondary activities. In that case, my income will be called as non-agricultural income. Yes, have you clearly understood? If you earn income out of primary plus secondary activities, it is agriculture income. If you earn income out of only primary activities, it is still agriculture income. But if you earn income only out of secondary activities, then it is a non-agricultural income. Lastly, if you have not performed any of these activities, neither basic operations nor subsequent operations, then definitely it goes without saying that your income will be considered as non-agricultural income. Now friends, my question to you is, the form in which you are getting the rice, paddy, which is called as paddy, you segregate the rice and you segregate the husk. If you do not do this and you directly sell that in that same form without segregating the husk and rice, if you sell it in the same form, before segregation if you sell, you are going to realize less amount of money. But if you segregate the husk and the rice and then you sell it, you are going to get more amount of money. So you are performing certain activities on that produce to make it fit to be taken to the market. In the market, if you go to the shop, you don't get the rice along with the husk. They remove the husk and they only sell the rice. So, if you want to take your produce to the market, what you have to do, it is mandatory for you to segregate the husk and the rice, because market recognizes only rice. So, you'll have to perform certain activities on that produce to segregate the husk and the rice. Whatever activity you are performing now, they are value adding activities. Because of those activities, the value of your produce will increase. Whatever value has increased now, you are going to realize more money. That more realization will also be considered as agriculture income. For example, you sell the rice along with the husk, then it is being sold in the market at 10 rupees per kg. But if you segregate the rice and the husk, then it can be sold in the market at 18 rupees per kg. Then, if you do this activity of segregation, then the value of rice increases from 10 rupees to 18 rupees per kg. Na? This activity is done to make your product fit for the market, because in market only rice is sold, husk is not sold separately, only rice is sold. So whatever activities you are performing on a produce to make it fit to be taken to the market, that is a secondary activity, but because of that value of produce will increase. So that increment in the value of the produce because of performing this activity, that incremental income will also be considered as agricultural income. That incremental income will also be considered as agricultural income. Second case, what do you mean by second case? Read me. What do you mean by second case? Point 2 or this one. Second case. Second case means I'll cover up the second case. Don't worry. I'm going to give you more examples on this. So in that automatically second case will be covered. Now my question to you is, do you believe that only growing food grain is agriculture? Do you believe that growing only food grain is a agriculture activity? Or there is something more to it? Yes? Besides wheat and rice, lot of things are there in agriculture. Na? Growing grains is an agriculture activity, pulses, vegetable, fruits, flowers, all this is agriculture activity. Whether dairy farming, poultry farming, is it an agriculture activity? Dairy farming. You give grass to the cow to eat, na? Then you get the milk. You sell the milk and you earn money. Is it an agriculture activity? No. Dairy farming, poultry farming, this is not an agriculture activity. So what will constitute agriculture? It says merely raising food grains does not constitute agriculture. Agriculture also includes plantation and groves or grass or pasture for consumption of beasts. It also includes articles of luxury such as betel, coffee, tea, spices, tobacco. It also includes commercial crops like cotton, flax, jute, hemp, indigo, etc. Don't ask me to explain each and every word. You can find out from internet. Betel means, betel is nothing but the leaf of the plant. You eat pan, na? Pan, mouth freshener. In the pan shop you get the pan, na? That pan is called as betel leaves. It is called as betel leaves. Point 4. All the activities over the land are not agriculture. Therefore, rearing or breeding of livestock, dairy farming, poultry farming, etc., these things do not constitute agriculture. These things do not constitute agriculture. Have you understood this? Have you understood this much? Okay. Now, without referring to these notes, I am going to give you certain examples. Without referring to these notes, I will be giving you certain examples and you have to identify whether it is an agriculture income or not. Or maybe I will give you example and I will also, along with the example, I only will give you the answer. For example, I am the zamindar. I am having very huge parcel of land. I am having a huge parcel of farmland. I have appointed Manoj as my employee to work as a laborer in my farmland. At the end of every month, I am paying salary to Manoj. Is it an agriculture income? Answer is yes. Because Manoj is earning income by doing primary activities and secondary activities. Therefore, Manoj's salary will be considered as agriculture income. It will not be taxable. Now, say for example, Manoj has worked with me as an employee for 3-4 years. Now Manoj says that, sir, I don't want to work as an employee. I want to do farming on my own. I want to do business. I want to earn profits. So I want to take up farming as my own business. I said that you don't have the plot of land. You don't have the land. How will you do the farming? Manoj says, no, I will take land on a rental basis. I will take land from someone on rent and I will do the farming. In that case, I told Manoj that, in that case, I will give my land only to you. I am having a huge parcel of land. Out of that, some portion of land I will give you on rent. You pay me rent. You do agriculture activity, you earn your profit, you pay me rent. So Manoj has agreed to it. Now I am letting out my land to Manoj. I am letting out my agricultural land to Manoj. So Manoj is going to pay me rent. That rent will be considered as which income? Will it be considered as agriculture income or will it be considered as non-agriculture income? So government says, if I let out my agricultural land to someone and that person, tenant, is doing agricultural activities on that land, then whatever rent he is paying to me, that will also be considered as agriculture income, that will also be totally exempt from tax. Are you understanding? I am giving you one example and making you understand that this will be considered as agriculture income. So first example I gave you, Manoj is working as an employee, laborer in my farmland. I am paying him salary at the end of every month. Is it an agriculture income? Answer is yes, it is an agriculture income. Second example I gave you saying that I have let out my agricultural land to Manoj. On that agricultural land, he is doing agriculture activity. So by doing agriculture activity, he will get his agriculture produce, he will sell the agriculture produce and earn the income. Manoj's income is definitely an agriculture income. What about my rental income? That will also be considered as agriculture income, provided on that plot of land, Manoj is carrying out certain agricultural activities. So in this example, Manoj's income is definitely an agriculture income. My income will also be considered as an agricultural income. Is that very clear? Till now, is that very clear? Yes or no? Yes. Let me take few more examples. Now Manoj says that, sir, if you let out the land to me, then you are enjoying a safe income, na? You have just let out your land to me and you are having a safe income of rent. But I have a huge risk, because if there is an unexpected rain, unwanted or unexpected rain, then my crop will get spoiled, na? My produce will get spoiled. So I am having a huge risk. So I told Manoj that, what do you want me to do? So Manoj said, do one thing, sir. We will do a partnership. I will use your land. I will put efforts. So you are contributing land, I am putting efforts. So we will do agriculture activities. Whatever produce we get, that produce we will share between us. Instead of I paying you rent, you give me the land. I will do agriculture activities on that land. Whatever produce we get, that produce we will share between us. I said, okay, I don't mind. So I have given my land to Manoj. On that land, he is doing agriculture activities. He has got agriculture produce, wheat, rice, etc. Now this wheat and rice, agriculture produce, we are sharing between us in some ratio. I will get my share, because I have given my land to Manoj to use for free of cost. He is using my land, so I have contributed land. He is putting the effort, so he is putting his contribution in the form of an effort. So whatever produce we get, we will share among ourselves. Say for example, we are sharing that produce in the ratio of 1:1. So whatever agriculture produce we get, 50% will be given to Manoj, 50% I will receive. So Manoj will sell his produce and he will get a income. Will that be agriculture income? Definitely yes. I have got my share in the produce. This my share in the produce, it is as good as rent only. It is as good as rent only. I have let out my land and instead of receiving rent in monetary terms, I am receiving rent in the form of a produce. So I will be called as a receiver of rent in kind. I'll be called as a receiver of rent in kind. I am receiving rent in kind. So my share of produce also, I will sell it in the market, I'll get money. My income will also be considered as agriculture income. So Manoj's income is agriculture income, my income is also agriculture income. Our produce from the land we are sharing between us. Manoj is selling his part of the produce, his income is agriculture income. I am selling my part of the produce, my income will also be considered as agriculture income. In technical terms, in the language of income tax, my share is called as revenue derived from agricultural land. My share is called as what? Revenue derived from agricultural land. This revenue derived from agricultural land is also considered as agriculture income and it is exempt from tax. Is that very, very clear? Yes or no? Okay. So we have the definition of agriculture income, section 2, clause 1a. In that we have subclause A, subclause B, subclause C. Here we have completed subclause A. Subclause A says what? According to section 2, clause 1a, subclause A, if following three conditions are satisfied, income derived from land can be termed as agriculture income. Number one, what you are getting? You are getting either rent from the land or revenue from the land. If I let out my land to Manoj and he is giving me money, he is paying me in monetary terms, it will be called as rent. If I give my land to Manoj and he is giving me some portion of the produce, then in that case, that portion of the produce which I have received will be called as revenue derived from land. Revenue derived from land. This is the first point. Second point, that land should be situated in India. And third point, it should be used for agricultural purpose. So land should be situated in India and it should be used for agricultural purpose. In that case, whatever rent is earned in monetary terms will be termed as rent. Whatever amount I have received as produce, that will be termed as revenue derived from agricultural land. Revenue derived from agricultural land is monetary. Rent derived from agricultural land is monetary. Revenue derived from agricultural land is non-monetary. Both are considered as agricultural income. So with this, our discussion of section 2, clause 1a, subclause A is over. Section 2, clause 1a, subclause A is over. Now we have section 2, clause 1a, subclause B. Section 2, clause 1a, subclause B. It says, when I perform certain activities on the agricultural land and I earn income out of those operations, then that will be considered as agriculture. Manoj is selling his share of produce. I sell my share of produce and I get the income. In both cases, it will be called as agricultural income. So, income derived from agricultural land by agricultural operations would be considered as agriculture income as per section 2, clause 1a, subclause B. Point A says what? Income from agricultural operations. Income from agriculture operations means we are having agricultural land on which we are doing agriculture activities, agricultural operations, we are generating some income. That income will be called as agriculture income. Simple it is. Number B, I am not deriving income from doing agricultural activities on a land. Definitely I have derived that income. But after I get the produce, now on that produce I am performing certain activities. Like I told you, I am segregating the husk, I am segregating the rice, then I am polishing that rice, then I am doing the grading activities, etc. Higher grade rice will be sold at a higher price, lower grade rice will be sold at a lower price. So, this income which I earn because of all these activities, the value of my rice will increase now. So that incremental value is also called as agricultural income. That is written in point B. Income from process ordinarily employed to render the produce fit to be taken to the market. Whenever you perform any activity on your produce, for example, I told you potato, you have to cut the roots, you have to clean the potato, you have to remove the sand from the potato. So those activities, your value of the produce will increase. The market price of the produce will increase. You are performing certain activities which is making that produce fit to be taken to the market. Point C, income from sale of agriculture produce. Income from sale of agriculture produce, from agricultural activities. You have got the agriculture produce. You sell that produce and you get the income. That is called as agricultural income. So with this, section 2 clause 1a sub clause B is also over. There is very important note here. Any surplus arising on sale or transfer of agricultural land. Any surplus arising on sale or transfer of agricultural land. This is not treated as rent or revenue derived from land. See, here in point number 1, we said that rent derived from agricultural land, revenue derived from agricultural land, these both are considered as agriculture income. It is exempt from tax. But say for example, I am having agricultural land. The market value of that agricultural land as of now is 50 lakhs and I bought it few years back for say 20 lakhs. So agricultural land which I had bought for 20 lakhs, its market value as on today is 50 lakhs. So I am selling that agricultural land at 50 lakhs. Thereby I am earning a profit of 30 lakhs. I am earning a profit of 30 lakhs. This will not be considered as agriculture income. This I have earned 30 lakhs by transferring the agricultural land, by transferring the asset, by selling the asset. I am not earning from basic operations or basic operations or subsequent operations or primary activities or secondary activities. I am earning profit by selling the land. This profit is not my revenue profit, it is a capital profit. This cannot be considered as agriculture income, this cannot be exempted. So whenever you earn some profit by sale of agricultural land, that profit cannot be considered to be rent or revenue derived from land. It cannot be exempt from tax. It is fully taxable. That we will learn when we move on to the chapter called as capital gain. In the capital gain chapter, we will learn that agricultural land is considered as a capital asset. If you sell it at a profit, that profit represents your capital profit, and that capital profit is taxable to you under that capital gain. So right now I don't want to get into the details of it, but right now I am just telling you that if you are having an agricultural land which you might have purchased, now the value of that land has appreciated. So you are selling that land, and by sale of land you are earning profit. That profit is a capital profit that will not be considered as agriculture income. Therefore, it will not be exempted. It will be totally taxable. That is what is written in these notes. That is what is written in these notes. Now, I would explain you section 2 clause 1a sub clause C. Section 2 clause 1a sub clause C. Listen to me very carefully. I will explain and then I will read the provision. One condition I will not explain you right now. I will explain you when we move on to the chapter of capital gain. There is one condition here in section 2 clause 1a sub clause C. That condition I will not explain you right now, because same condition is also there in the chapter of capital gain. When I move on to the chapter of capital gain, I will explain you that condition. But right now I am explaining you one situation. Listen to me very carefully. See, in a village you might have observed that there are farmers who are having farmland. If you have seen any farmland, just near to that farmland, that farmer will have a very small house, temporary kind of house, hut kind of thing, or maybe a cement structure. If farmer is having money, he may build a cement structure. So every farmland, near to that farmland, somewhere you will be having a small house. Generally, all the agricultural equipments, etc., they are kept in that house. like pump, plow, all these things are kept in that house. Now say for example, I am letting out my agricultural land to Manoj. Along with that agricultural land, I have also given that small house to Manoj. So Manoj is paying me rent for the agricultural land as well as for that small house. And Manoj is occupying that house for his own purpose, for his residence purpose. So what I have let out to Manoj? I have let out agricultural land to Manoj. To that agricultural land, a small house is attached. That house is also given to Manoj on rent. So I am receiving rent for agricultural land and I am also receiving rent for that small house. That small house we can call it as farm building. Farm building means near to the farmland there is a small house. That house can be called as a farm building. Now I am getting rent for two things. Number one, for letting out my agricultural land, and number two, for letting out my farm building. I already told you that when you let out your agricultural land and you on the rent, that will be considered as rent derived from agricultural land. It is considered as agriculture income as per section 2 clause 1a sub clause A, and it is totally exempt from tax. Number two, whatever rent I am receiving from that farm building near to the farmland, I have a small house that can be called as a farm building. I have given that farm building to Manoj on a rental basis. So Manoj is paying me rent. Generally what happens? When you let out one house, when you let out the house and you earn the rental income, generally that rental income is taxable under the head income from house property. Generally, income from letting out of the house is taxable under income from house property as definitely non-agricultural income. But government says if certain conditions are fulfilled, then whatever rent you earn out of that farm building also that will also be considered as agriculture income and tax will not be levied on it. That will also be considered as agriculture income and tax will not be levied on it. How many conditions are required to be fulfilled? 4 conditions are required to be fulfilled. I repeat, I have let out agricultural land along with the farm building to Manoj. Farm building is nothing but a small house attached to the agricultural land. So Manoj is paying me rent for agricultural land. He is also paying me rent for farm building. Rent for agricultural land is agriculture income for me. It is exempt from tax. What about the rent for that farm building? That rent for farm building is nothing but rent from a property. Generally, it is considered as income from house property. But government says if 4 conditions are fulfilled, then rent from that house, rent from that farm building will also be considered as agricultural income and it will be totally exempt from tax. Tell me, till now you have understood? Till this point, have you understood? Yes or no? Yes. So listen to me very carefully. Now I am explaining you certain conditions. How many conditions? 4 conditions. If you are having a farm building attached to the farmland, that farm building you have let out and you are getting the rental income, generally it is considered as income from house property and it is taxable. But here in section 2 clause 1a sub clause C, government says if 4 conditions are fulfilled now, that income from that property will be considered as agriculture income and tax will not be levied. Number 1 condition is that farm building should be occupied by the cultivator, grower or producer. So Manoj is a cultivator, he will be doing cultivation on the land. So either Manoj should occupy that farm building or I should occupy that farm building. I am the owner. Either I should occupy that farm building or Manoj as a cultivator is occupying that farm building. So condition number 1, either the cultivator, grower, producer, Mr. Manoj should occupy the farm building or I, the owner of that farm building, should occupy the farm building. This is the first condition. This is the first condition. Number two, that farm building should be situated near to the farmland. Means it should be attached to the farmland. This is the plot of land, to near to that there is a farm building. So second condition says that farm building should be attached to the farmland. It should be adjacent to the farmland. It should be near to the farmland. This is the second condition. This is the second condition. Then third condition says that farm building is required to be used as a storehouse or dwelling house or other outhouse building. Storehouse means what? Means you are using that farm building for storing the agricultural equipments. You are using the farm building for storing the agricultural equipment like pump, like plow, all this agricultural equipment, all those equipments which are necessary for doing agricultural activities, those equipments are stored in that farmhouse. They are stored in that farm building. So that farm building is used as a storage house, storehouse for agricultural equipment, or it is used as a dwelling house or other outhouse building. So basically that farm building should be used as a storage house for storing the agricultural equipments. This is the third condition. And the last condition is that farmhouse, that farm building should be accessible to tax. Accessible to either state tax or the local body tax. See, state government would levy tax called as land revenue on a plot of land. And municipal corporation, local body, would levy tax on a structure on the land. So either this farm building should be accessible to the land revenue or to the local rates. If these four conditions are fulfilled, then whatever rent I am receiving from Manoj for that farm building, that rent will be considered as agricultural income for me, and it will be totally exempted from tax. It will be totally exempted from tax. Tell me, have you understood this section 2, clause 1a, subclause C? Yes? Have you understood this? Yes or no? Yes. Okay. So let us read this from this textbook. Let us read this. Section 2, clause 1a, subclause C says that normally income from property. I will read, don't worry. Rizwan, while reading, I will explain you once again. Generally, income from property is taxable under the head income from house property as per section 22. However, if following four conditions are cumulatively satisfied, cumulatively satisfied means all the conditions are satisfied at the same time, then rent from this farm building would be considered as agriculture income and it will be exempted from tax. First condition, that building should be occupied by the cultivator or grower or producer. That cultivator can be a landlord also, or it can be a tenant also. Or building is occupied by the receiver of rent in kind as a landlord. I have given my building to Manoj. He is going to give me rent not in monetary terms but in the form of produce. So I will be called as a receiver of rent in kind. I can also occupy that building. I am a landlord. This is the first condition. Second condition, such building should be situated on an agricultural land which is in the immediate vicinity of the agricultural land situated in India used for agricultural purpose. In simple language, that farm building should be attached to the agricultural land. It should be near to the agricultural land. It should be adjacent to the agricultural land. Third condition says the cultivator or the receiver of rent in kind, by reason of his connection with agricultural land, they would require this building to be used as a dwelling house. Dwelling house. Dwelling house means in that farm building you might have set up that pump set, na water pump set you have to set up, na. So if you have set up that water pump set inside that house, that can be called as a dwelling house. See, these things are very normal. You can just Google it and you will get the photograph of dwelling house. Dwelling house or storehouse. Storehouse means you are storing agricultural equipments in that, or other outhouse building. So this building is used either as a dwelling house or storehouse or a other outhouse building. And number fourth condition. See, number 4, there are two parts. Part 1, part 2. Part 2, I will not explain you right now. It will be difficult for me to make you understand. So this part 2, I will be discussing with you in capital gain. Part 2, I will be discussing with you in capital gain. Right now, I will just explain you condition 4, part 1. It says, this land should be assessed to land revenue or it should be assessed to local rates. It should be assessed to land revenue or it should be assessed to local rate means on that you are paying land revenue to the state government or you are paying municipal tax to the local body. Either it should be accessible to the state government or it should be accessible to the local body. But in point number 4, we have second condition. If this first point, part 1 is not fulfilled, then we have part 2. So either you fulfill part 1 or you fulfill part 2. In that case, we say that condition number 4 is satisfied. Condition number 4 is satisfied. Now part 2, intentionally I am not explaining you right now. When I am on to the capital gain, we will refer that same thing. Same thing is appearing in capital gain also. And once we refer that, we can come back here and see that it is same. So if 4 conditions are fulfilled, then income from the farm building would be considered as agriculture income and it will be totally exempt from tax. So here we say if all the aforesaid conditions are satisfied, income from the farm building will be exempt from tax, considering it to be a agricultural income. This is as per section 2 clause 1a subclause C. Now last point, let me refer to the last point. With this, definition of agriculture income will come to an end. In fact, definition of agriculture income is already over. Just for the purpose of clarification, I am asking you one point. Say for example, I am having a agricultural land. Near to the agricultural land, there is a building. I have let out my agricultural land and building both to Manoj. But on that agricultural land, Manoj is not doing any agricultural activities. I have let out an agricultural land to Manoj. Manoj is using that agricultural land not for agricultural operations. He is carrying out certain non-agricultural operations on that agricultural land. So Manoj is earning income out of other activities other than agriculture. Then Manoj's income is definitely non-agriculture income. And rent which I receive from Manoj, will it be agriculture income or it will be non-agriculture income? Definitely that will also be non-agricultural income. So it is not that when you let out the agricultural land, your income will be considered as agriculture income. That is not the case. Point to be noted is, I am having an agricultural land, I have let out the agricultural land, tenant is using that land for agricultural purpose. Then my rental income would be agriculture income. If I let out my agricultural land to someone and that some other person is using for non-agricultural activities and is paying rent to me, then that rent would be considered as non-agricultural income. It would not be exempt, it would be fully taxable. Have you understood this very, very clearly? Yes or no? Have you understood this? Okay. Okay. Now see, I am having some instances, I am having some examples of agriculture income and non-agriculture income. I am having some examples of agriculture income and non-agriculture income. I don't want to waste my time on these examples. So what I'll do now, I'm giving you this as homework. When we meet tomorrow, in 5 minutes time, we'll revise this. This, I think, in ICI module, these examples will not be there. But we will refer to this example. You take this example as part of homework. Refer to this example. Left hand side, we are having the example of agriculture income. Right hand side, we are having the example of non-agriculture income. Every time you have to apply your mind by referring to the definition, you have to decide whether the income is agriculture income or non-agriculture income. So if you are doing basic operations or you are doing basic operations as well as subsequent operations. Basic operation means primary activities and subsequent operation means secondary activities. If you are earning income from primary activities, your income is agriculture income. If you are earning income out of both primary activities as well as secondary activities, then also your income is agriculture income. So I have given a lot of examples relating to agriculture income as well as non-agriculture income in this table. You refer to this. Wherever you are having doubts now, you put a marking against that point so that we'll discuss that point quickly within a span of 5 minutes. We'll refer to this table tomorrow. Now there is something called as partial integration. That also I will not be in a position to discuss with you today. But I would like to discuss this composite income with you. I have some 10 minutes time, 7 minutes time. So I will discuss this composite income with you. Listen to me very, very carefully. For example, Manoj is a farmer. Manoj is growing wheat and he is selling the wheat. His income will be of which nature? Definitely his income will be of agricultural nature. His income will be agriculture income. So what Manoj is doing? Manoj is growing wheat and once he gets the wheat, he is selling it in the market and is getting money. So he has earned income from agricultural activities. So his income is agriculture income and is totally exempt from tax. Second example, this was the first example. Now I am giving you second example. For example, I am purchasing wheat from Manoj. I am taking this wheat to my factory. In that factory, I have the grinding machine. I am putting the wheat in that grinding machine. Then I get the flour, wheat flour. I am selling wheat flour in the market. My income will be of which nature? Definitely my income will be non-agricultural income because I have not performed any agricultural activities. No primary activities are performed by me. I have just purchased the wheat from the market. I have done the grinding process and I have got the wheat flour. I am selling the wheat flour. So I am earning income out of processing activities. I have just done the secondary activities or processing activities. No primary activities are done by me. So my income will be considered as non-agriculture income. Have you understood these two examples very clearly? Yes? Have you understood these two examples? Yes or no? Manoj has done some agriculture activities on the agricultural land. His income will be called as agriculture income. I have purchased wheat from Manoj. I have done the grinding. Now I am selling the wheat flour. My income will be considered as non-agricultural income. Now, let me combine both these examples. Let me merge both these examples and make it one. I am merging both the examples and I am making it one. Manoj is doing some agricultural operations on agricultural land and he has got the wheat. Manoj is not selling his wheat. Manoj is also having a factory. In that factory, he is taking his own wheat, which he has grown on his farmland. He is taking that wheat in his factory. He is grinding the wheat. He is making the wheat flour and he is selling the wheat flour. Manoj's income would be of which nature? That is the question. I gave you first example, he has grown the wheat and he has sold the wheat, it is agriculture income. Second example, I have purchased the wheat, I have grinded, I have got the wheat flour, I am selling the wheat flour, my income is non-agriculture income. Now I have merged both the examples. Now I say that Manoj has done some agricultural operations, he has got the wheat, that wheat he has taken to his own factory, he has processed and he has sold the wheat flour. His income would be of which nature? So the correct answer is his income would be partly agricultural income and partly non-agricultural income. Partly it will be agriculture income, partly it will be non-agriculture income. Such a kind of income wherein you are engaged in growing as well as manufacturing process. If you are engaged only in growing process, then your income is agriculture income. If you are engaged only in manufacturing process, your income is non-agriculture income. But if you are engaged in both growing as well as manufacturing, growing as well as processing, then your income will be definitely partly agricultural, partly non-agricultural. Such income is called as composite income. Composite income means combination of both, agree as well as non-agree. Now the question is, we will have to segregate this income. We will have to segregate. Why? Because agriculture income is not taxable and non-agriculture income is taxable. Agriculture income is not taxable and non-agriculture income is taxable. So we'll have to segregate out of the total income which I have received by selling the flour, by selling the wheat flour, whatever income is derived, that is a composite income. Out of that composite income, how much is agricultural, how much is non-agricultural, that is what I need to segregate, I need to bifurcate. For that, government has already made certain rules. Government has studied the agricultural activities and non-agricultural activities, and government has given the percentage. So we have separate rules. Government says if you are growing and manufacturing tea, I'll just read this table. Remaining part we'll discuss tomorrow. I'll just read this table and read the percentage. If you are growing and manufacturing tea, in that case, as per rule number 8, 60% income is agriculture income and 40% income is non-agriculture income. You are engaged in which activities? You are engaged in growing as well as manufacturing. Let us wind up here. Thank you very much.